India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, I can't say it is finally Friday because tomorrow is working. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And it's, of course, the day before the budget, so it is a day before the budget. And I think that'll be the dominant talking point, expectations and all of that. We have got the global stuff to track as well. And I think there are some comments coming in from US President Trump on tariffs, etc., which the markets, at least for now, are taking seriously. I'm Prashant. With me, my colleague Surabhi, and Reema is with us today on the show. Guys, hi, morning.
Hi, morning. So, working Saturday, Sunday we're off?
I don't know.
Just checking. Didn't want to rub that in, but yeah, possibilities.
Too early to say, I would say, right? Depends on what comes in the budget. Reema, I think, is working.
No,
both it is.
I think that'll be for me.
No, but I guess, overnight we've got some interesting headlines as usual, but the market's been in a mood to at least put a floor to the almost endless slide, right? And maybe the bulls will hope that can continue today.
I was wondering, every day President Trump holds a press conference and it goes on for about 1.5 hours. Sometimes he's rambling on. And but it goes every day. So, you got to, there's a lot of speak and maybe there will be action as well. But take it from the beginning. And I'll start with what Trump once again said. And President Trump confirmed that he will implement 25% tariffs on Canada and Mexico on the 1st of February. We should put the confirmed bit in semicolons, but basically you've got, it's a confirmation, but he's confirmed before as well. And he also, by the way, said that he'll implement China tariffs. It's unclear by when, how much, etc. He didn't say very much. Now, his comments could be simply threats, but markets traded them at face value. And why do I say that? You look at currencies, essentially. You look at the dollar first up. And all these comments came towards the end of the US session. The dollar index rose above, the broad dollar that is, rose against most currencies, above 108. And we are holding this morning at about 108.14. But look at the Canadian currency, 1.46. The Mexican currency rallied, the USD Mexican cross basically rallied to about from 20.4 to 20.75. And the CNH is basically once again broken above the 7.28 levels. So that's the broad. And by the way, these levels are holding, largely speaking. So we'll have to kind of see whether there is more to it. By the way, 1st of February, at least in case of Mexico and Canada, is tomorrow. So will we see something over the weekend in terms of those tariffs? I think markets will wait. And if that does happen, I think there perhaps is a little more dollar upside, dollar strength here. But markets will wait for the actual announcement. Now, overnight equities, S&P 0.5%, NASDAQ about 0.25%. Gold made a record high. I think that's the only other. Look at yields unchanged. Dollar I already mentioned. Gold I think is the only one which has made new record highs. But gold also is looking a little overstretched here. So if you're looking to buy, don't chase because there could be a pullback around the corner because just momentum-wise, it looks extremely hot right now. Almost 2,800, but it's been great for gold this year. Apple reported numbers and the stock was up about 2.5%. Actually, iPhone sales were a little poor, but the second quarter forecast, so stock anyway, our post-market was up a little bit. Now, Nifty, just to circle back to the levels here, the Nifty has basically had 3 days of positive close. Yesterday, we hit the 20-day moving average and then basically gave up some gains, but it was still about 0.4% in gains. So the 20 days, the resistance, 23,330 is that level. And then the 40-day exponential moving average comes into focus, which is 23,580 on the upside. On the way down, broadly, you could look at the recent low, or the better thing to do is to just look at this band, 22,900 to 23,000, which should act as a bit of a support zone right here. Now, the Bank Nifty has crossed the 20-day moving average. It closed above it, and it's now inching towards, I should say, to the 50,440 level, which is the 40-day exponential. And beyond that, you look at the daily Bollinger Band. On the upside, that is 50,523. And support comes in at the 40 hourly exponential, which is at 48,922. The GIFT Nifty will indicate what the start is looking like. But remember, it is the budget tomorrow, and no one knows. I mean, there are always expectations. Maybe this time it's a little less than what markets thought, but zero people know what is going to come. So just be mindful of exactly that, because we can all convince ourselves about various things, but we'll know tomorrow. And as I always say, keep expectations low ahead of these kind of events. I mean, if something comes, great. I mean, and you'll be able to trade it, but you don't want to be caught on the opposite side, because that's happened more than once over the last few years now. So 16, 17 points higher on the GIFT Nifty at this point. Surabhi.
Prashant, very philosophical this morning, right? Keep expectations low. That could be said for, almost all things in life, right? The success or the happiness.
I always say that.
Keep expectations low, all right. Applies to the budget as well. But, just a couple of points. By the way, US futures are building on gains. NASDAQ futures are up a little over 0.5% right now because of the positive tech earnings that have come through. If we talk about, this whole issue of tariffs, I picked up some specifics in what Mr. Trump was saying overnight. First of all, the numbers. Now, if you look at the value of trade, and this is data up till November of 2024, so 11 months of data, the value of the US-Canada trade is just under $700 billion, and it's about little lower than $800 billion with Mexico. So this is what's at stake. There are a couple of outlier issues still remaining. For instance, what is he going to do with oil? Will he allow, Canadian oil imports to come in or not? What will he do with lumber? So on this, I just want to pick up the one statement that really sort of caught attention. He says, with Canada, that is, on the Canada tariff piece, he says, we don't need the products they have. We have all the oil you need. We have all the trees you need. So that's oil and lumber. On China, he also sort of, again, made some noises. And he goes on to say, I'm also thinking about something because they're sending fentanyl into our country. And because of that, they're causing hundreds and thousands of deaths. So China is going to end up paying a tariff also for that. And we're in the process of doing that. Now, he didn't specify new numbers, but he's been saying 10% to start with, maybe going up to 60% or higher. So let's see, how much of this is just rhetoric and how much he will actually follow through on. But Canada and Mexico seems to be real. There was a little bit of reaction even in the oil markets. First there was a little bit of a spike in oil, but then oil is lower because the larger issues there are going to be resolved with the OPEC meeting, which is the 3rd of February. And remember the US president has been telling OPEC as well that the world in general needs more oil. So basically, you've got some green on the screen once again. In Asia, trade is mixed. Some of the markets are now coming back from the Lunar New Year holiday. For instance, South Korean markets have opened up after 4 days of a gap. But the focus point is all the data that we're getting out of Japan, and it's fairly mixed. CPI continues to inch higher, 2.5% in January versus 2.4% in December. And we know that's why the BOJ has been increasing rates. They did that in the last meeting. The unemployment data is also looking better. Unemployment is at 2.4% versus 2.5% in the previous print. The retail sales data is really, really amazing. 3.7%, 6-month high for Japan retail sales. The Japanese are really going out there shopping. And like I said, some of the other markets are kind of coming back in. So whatever little cues we have, largely positive across Asia. For us this week, it's been a challenging week. The bulls have decided to fight back, but the mid-cap and the small-cap market, that's still hurting. Nifty's up 0.7%. The mid-cap index is down 1%. The small-cap index is still down about 2% for this week. So let's see if we'll see more of this recovery play out today or not. In results, I've only picked out L&T because there's so many and we'll go over the list in our top 10 segment. But L&T is interesting and it's a mixed bag. Now, the big headline was this order inflow number, 1.16 lakh crores. That's the highest ever order inflow and it's surged over 50-odd%. That's great. But the margins issue with L&T is always, the market's issue with L&T always has been margins. And that's where there's a bit of a disappointment because EBITDA and the margin number have missed estimates. So let's see what the approach is going to be. Slightly mixed on, on the numbers. Finally, all eyes on budget. And while Prashant is saying keep expectations low, the market will hear none of it, right? Because, Prashant, I don't know if you've been hearing this or not. I've started to hear a lot of chatter around STT now, saying that since you've hiked capital gains to, 12.5%, and since STT collections have been soaring, last number is about 44,500 crores of STT. Maybe do you want to sort of go a little slow? And the fact that the F&O market rules have also changed because they hiked the STT on F&O in the July budget. But again, I think this is more market hope than anything. And
You know-
Prashant is saying, keep hopes low.
Somebody called me, I think day before yesterday, said, well, is capital gains being cut? So it's as you go into the budget, there's
Positive.
always, hope, right? It's just human nature. But I think if you're trading and you're putting money on the line, and trading, not investing, trading, I mean, then you've got to be...
Then you can't trade on a hope.
You've got to preserve, first, and then look to make money. So,
That's true.
Absolutely. Rima.
Well, I just wanted to do a complete roundup of the mega tech earnings, considering the heightened selling that we had earlier this week and over the last 2 weeks, perhaps. So first, Microsoft. Microsoft ended with a cut of more than 6%, as despite the heavy investments made in AI in general, their AI, cloud revenue, spending, etc., disappointed the street. Tesla, on the other hand, ended with a gain of nearly 3%. The earnings were a miss, but the company has promised to return to growth in 2025, and particularly the street was enthused by their plans to launch cheaper models, and even they're planning to start autonomous ride-hailing service in the month of June. Meta also gained up close to about 1.5% revenue beat for Meta in the quarter gone by, and Zuckerberg has promised this year to be a really big year. IBM had its best day since 2000 with a rally of nearly about 13%, and Apple, we spoke. The numbers came post-market hours, and currently in after-hour trade, Apple shares are up close to about 3%. And considering the heightened scrutiny around whether AI-related capex and infrastructure spending will continue in light of Deep Through's breakthrough, well, at least the top tech CEOs continue to reaffirm that capex will be intact. So Meta is talking about a $65 billion spend this year in infrastructure, Microsoft $80 billion in building data centers, and Zuckerberg, when he was asked particularly about whether the capex spend will slow related to AI infrastructure, and he said that even if less computer infrastructure is needed for training, based on what we've seen from DeepSeek, he says an increase in AI usage will require basically the current level. This level of investment is what he said. So in a way, reaffirming that capex spend will remain intact. But there's so much to track today. And before that, let's just quickly get to the flows picture, because yesterday, despite the markets closing up with a little bit of a gain, the FI selling was huge. Nearly 4,500 crores sold by the FIs in the cash market. The DIIs bought about 2,100 crore. But one day before the budget, guys, is also the economic survey.
Yes.
And that will be tabled at 12:30. So that's going to be watched. In the US, we've got PCE, back home, core sector, fiscal deficit data will come post-market hours. And talking about micros, Marico and Nestle. These numbers will be released.
Does not feel like a Friday at all. This could be as good as a Monday, actually. Forget Friday, so, given the kind of data flow and the events that are lined up ahead. But let's get started with the equity call of the morning. And we have one that's coming in from Jefferies. Now, what are they saying? Mahesh Nadurkar of Jefferies says the long-awaited market correction is now underway for the last 126 days, making it the second longest of the last 10 corrections that we've seen in a 10-year period. He says at 15%, the current correction is in line with the average corrections. He adds that the Nifty should bottom out before the 7th of February, assuming no tax surprises in the budget and a pro-growth RBI meet. He says rate sensitives should do well in the expected near term. He says that the 12-month outlook depends on FPI flows. A strong equity supply offsets domestic flows.
Okay, well, let's quickly tell you what's lined up here in terms of interactions. So at 8:35, it'll be an interesting conversation with the management of PB Fintech. They'll join in for their third quarter earnings check. 9 o'clock, you'll be hearing from the Dr. Lal Pathlabs management. 9:20, Sameer Arora of Helios Capital, market master of the day. 9:30 this morning, Tata Consumer Products will be with us for their third quarter sort of performance and update. Max Healthcare will be speaking with us at 9:40. Prestige Group, Prestige Estates reported numbers, and you'll have Irfan Razak as always come in and talk about those numbers. And 9:55, we'll talk tax and what can we expect. So two tax specialists fill us in terms of tax expectations from the budget. And Lata then at 10:15 will be speaking with the Bank of Baroda management on their third quarter earnings. Okay, well, we'll take a quick commercial break here. We'll come back with our research team in terms of the stocks, the top 10 stocks to watch out for this morning.
Welcome back. Lots of earnings and lots of news flow to go over. And we have our team standing by with a CNBC-TV18 list of top stocks to watch. Well, guys, happy Friday to all of you. Can't say thank God it's Friday today, but we can still be happy this Friday. Let's start off with L&T. Vivek, what do you make of it? The announcements on the order inflow are stupendous. But what about the rest of it?
Well, that's right. Good morning. So L&T will remain in focus. Remember, largest capital goods infra company as far as the entire Indian capital goods sector is concerned. Remember, what's actually transpired over here is that execution has been quite strong. Core margins continue to remain quite unhealthy at this point of time. So revenues are up by a little over 17%, much above the CNBC-TV18 poll. However, the core EBITDA came in at close to 6,255, below the poll of close to 6,600 crore. Margins, the consolidated margins, the one that we're talking about, 9.7%, well below the poll of 10.4%, and profitability also below the poll. Now, the core operating margin in the E&C business, that business that which the management had guided for a margin band in the range of 8.2 to 8.25, that has come in only at 7.6%, which is a significant miss, and this is something that the street has been awaiting in terms of a margin recovery. Q3 order inflow, that is the strong point of this particular results. This stands at 1.16 lakh crore, well above even the highest estimate that the street had. Order prospects continue to remain quite healthy. 5 lakh crore is the order prospect that the company has as far as Q4 is concerned. Now, the good part in the call is that the management has maintained guidance across all of the key parameters, including the core margin guidance of 8.2%. Now, the company has also said that there is an upside risk to the order inflow guidance of 10% that the company had guided on a base of 3 lakh crore last year. So remember, order inflow guidance could be up, revenue guidance also could be up. Core margin guidance that is maintained, but the Q4 ask rate is quite steep. Expect the stock to open in the red, but could see some recovery on the strong order inflow.
Thank you very much for that. It's over to Vinny now for Tata Consumer. Vinny.
So in terms of numbers that have come in for Tata Consumers, largely in line with estimates that we're seeing overall results. But India margin, that's a bit of a concern that's coming in there. Due to the steep rise in tea prices, we've seen India margin see a bit of a decline. On the international margin front, they've seen an expansion coming in. And overall also, that is supporting the EBITDA margins of the company. So yes, EBITDA margins for the company have come in at 12.7%. Our poll was also 12.7%. But overall, year-on-year basis, the margins have seen a contraction of around 230 basis points. What other key concerns that come in for the company is in terms of the growth of the India business and core business over there was just 14%, where they were expecting a growth of around 20%. Tata Sampann revenue growth was just at around 23% versus 30% was what was guided by the company. So yes, keep an eye out on Tata Consumers. Maybe a bit of a muted start is what one could expect, or a bit on the red side is what we're watching out for, and then maybe move on to the green.
All right, Vinny, thank you very much for that. In fact, you'll hear from the manager of Tata Consumer at 9:30 this morning. So stay tuned for that. Well, let's talk about cement and Shree Cement's numbers in focus. Vivek is here. I was going to recap those numbers for us. Vivek, back to you.
Well, that's right. So Shree Cement, a good set of numbers, a sharp recovery on a sequential basis, largely aided by the fact that petcoke prices sequentially have dipped. Now, looking at the numbers themselves, remember, volumes have dipped 1% on a year-on-year basis. Revenues coming close to 4,235 crore versus the poll of 4,490 crore. The core EBITDA coming in at 947, compares very favorably versus the poll of 880 crore. Margins at 22.37 versus the poll of 19.6%. The EBITDA per ton has improved strongly on a sequential basis at 1,080 rupees a ton versus last quarter at just around 780 rupees a ton. Power and fuel costs, like we mentioned, down 28% on a year-on-year basis, and the management has indicated that it is on track to commission close to 15 million tons of annum per capacity. This is in the first quarter of FY26. Expect green on Shree Cement today.
Thank you. And what about JSPL, Vivek?
Well, on the other hand, JSPL results don't look so good compared to what the poll was as far as CNBC-TV18 was concerned. The revenue has come in close to 11,750 crore versus the poll slightly higher, 11,673 crore. The core EBITDA has come in at 2,184 crore versus the poll of 2,285 crore. Standalone EBITDA per ton has come in at 10,668 rupees per ton versus the poll of 11,230 rupees a ton. So operationally a miss, expect some green. Along with that, debt has inched up sequentially. The company is in the midst of an expansion plan looking to raise its capacity from 9.6 metric tons to 15.9 million tons. Now, the other key worry that the analysts have pointed out is the fact that the company has gone ahead and given another capex. Now, the capex framework from FY25 to FY26 stands at 23,400 crore, and this is something that the street is looking for in terms of more clarity. So expect some red from JSPL in today's trading session.
I mean, for steel players, of course, I mean, the bigger news flow is going to be, apart from specific results, is the safeguard duties. And, the clamor has been rising that something should be done sooner rather than later. Well, Bank of Baroda is the next one. Abhishek is here with details of this one. Abhishek, morning.
Morning, Prashant. So operationally, a very weak quarter for Bank of Baroda, especially in the light of the fact that their asset quality has improved. Despite that, the net interest margin on a global basis is at 13-quarter low of 2.94% versus 3.1% in the previous quarter, which suggests that higher cost of borrowing or cost of deposits or the money coming into the balance sheet is at elevated interest rate. So domestic net interest margin is at 10-quarter low of 3.1% versus 3.3% in the previous quarter. Even their international net interest margin has declined to about 1.83%, which is an 8-quarter low versus 2% in the previous quarter. CASA ratio across industry, you are witnessing a decline in CASA ratio. For Bank of Baroda, it's at 18-quarter low. Quarterly annualized credit cost is at 7-quarter low, which is heartening to see because slippages have reduced on a sequential basis, that is quarter on quarter. So gross NPA ratio, one of the best that you are seeing in last 10 years or even more, 2.43% versus 2.5% in the previous quarter. However, return ratios don't look so good. So return on equity is at 10-quarter low of 17% versus 19% in the previous quarter. Their P&L with respect to NII is below our poll. However, thanks to lower provision, their PAT is ahead of our poll. Back to you.
Okay, all right, got it. Abhishek, thank you for that. So not a very good quarter. We'll in fact connect with the management of Bank of Baroda and discuss the trends and the outlook from here on. Let's now talk about Kalyan Jewellers, a stock that's been in news for all kinds of reasons beyond earnings. But yesterday it was earnings that came through. Vinny, how do they look?
So earnings this time are looking good, that given the Q3 update, which also showed strong earnings coming in for the company, and that is what they've delivered, 39.5% growth in terms of revenue. Margins at around 6% this time versus 7.1%. So just keep an eye out on that one. Overall, in terms of profits of the company, that has also seen a growth. Now, in terms of internals, the SSSG growth, that has come in at 24%. In that, South revenue is around 35%, non-South is around 48%. Started ratio at 29.5%. So numbers are not looking bad. We're on the back of numbers. It's surely a strong performance because the stock has also fallen around 45% from its highs. So keep an eye out on the move coming in for the stock. But do not forget, another important announcement that they made is that now they've reappointed Anish Kumar Saraf as who's the managing director of Warburg Pincus and as a non-executive director on the board of the company. Again, it's a reappointment coming in. Previously, also, he was a part of this non-executive director list. So this could be interesting to watch out for, and we could expect a bit of a green coming in for Kalyan Jewellers today.
Thank you very much for that. 795 was the high on Kalyan Jewellers just at the start of the month, and the stock closed yesterday at 440. Big fall. Vivek is now back with us for One Source Pharma. Vivek.
Well, that's right. An important development here as far as One Source Specialty Pharma is concerned. We accessed the term sheet. What we understand is that there's a block deal likely in today's trading session. The total size of this particular block is close to 6.8% of the total equity, indicating that the size of the deal is close to 1,200 crore. The floor price is at a close to 4.5% discount to yesterday's close, so 1,545 rupees a share. Who are the sellers? Two promoter entities and a TPG affiliate, Tenshi Pharmaceutical, Pronoms Ventures, and a TPG affiliate of Medela Holding. There is a lockup on further sale of shares on all three of these entities. Expect some red to begin with today.
Okay, all right. So keep an eye out on that one as it opens up. Let's talk about Navin Fluorine. I think the numbers came yesterday in the afternoon. Upasana has got more details on this one. Upasana.
Well, the company has reported an upbeat performance, mainly aided by the margin expansion. Revenue was in line, while PAT and EBITDA margin stood above our poll. Now, Q3 revenue growth for HPP stood at 22%, specialty stood at 26%, while CDMO reported a revenue growth of just about 8%. Now, coming to the numbers, revenue stood at 606 crore with an uptick of 21% on a one-year basis. Margins saw an expansion of 920 basis points at 24.3%, and PAT stood at 84 crore with an uptick of 7%. Now, company in its con call highlights has given an outlook for 2025. It says that it remains confident of ending the year with 25% plus EBITDA margins, and it also says that scale up across the newly commissioned projects will be driving growth from FY26 onwards. It has also updated that additional R32 capacity at a capex of 84 crore is progressing on schedule to be commissioned by Feb 2025. So overall, upbeat numbers. I expect the stock to open in green.
Okay, all right, Upasana, got it. We'll watch out for Naveen Fluorine. More numbers. PB Fintech also reported yesterday. We've got Yash with the details. Yash, how are the numbers?
Well, Surabhi, PB Fintech has managed to deliver another strong quarter, and this has happened over a strong base which they had to work on. The premium which they generate for insurance companies, that grew by 46% at about 6,135 crore rupees. The revenue which they derive in terms of commission and other income, that grew by about 48% at about 1,292 crore rupees. Contribution was up 27% at 330 crore rupees, though contribution margin came down by about 400 basis points at about 26%. Adjusted EBITDA, that has doubled in the quarter at about 79 crore rupees versus 39 crore rupees. Adjusted EBITDA margin, that was up 200 basis points at 6% versus 4%. And PAT, that also grew at about 95%, coming in at about 72 crore rupees. Importantly, the annual run rate has also increased by about 46% at 665 crore rupees. So it's a strong quarter for PB Fintech. The stock has corrected about 21% in this month itself. It'll be interesting to watch how the stock performs today.
Okay, and the PB Fintech management also joins us shortly, as we outlined earlier. Yash, thank you very much for all those details. Biocon is the next one. Vinny's back with more. Vinny, morning.
So in terms of numbers that's coming in for Biocon this time, it's a bit of a miss versus the estimates. But before I start off and give the details in terms of numbers, do not forget that Q3 FY24, there was this branded formulation India business which was included as a part of revenue. Now that time, on a like-for-like basis, it's not a comparison that we could make on a year-on-year basis. So yes, it's an adjusted number that we're watching out for. Yes, versus estimates, it's a bit of a miss coming in terms of the margins as well as the revenue front. But like-for-like basis overall, we're seeing a 7% growth in terms of revenues. 3,856 crores is what the revenue is at. Margins came in at 20%, while the EBITDA is also seen a growth of 16%. In terms of segment revenues, biosimilars has done quite well, 14% growth versus research, which is seeing an 11% growth. A bit of a subduedness that came in just on the generic side of the business. Now, do not forget, there is a bit of a miss on the margin front, but the company has gotten clearance for two of its important facilities in the biosimilar front, the Bangalore as well as Malaysia facility. That is going to be a key growth driver for the company going forward. So maybe the stock could open up in the red and then move to the green side. So let's watch out for Biocon.
Thank you very much for that, Vinny. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Shree Cement, PB Fintech, Naveen Fluorine, Kalyan Jewellers. Stocks with negative news flow this morning are Tata Consumer, L&T, Biocon, JSPL, Bank of Baroda, and OneSource Specialty. But from stocks, let's get to commodities. Manisha is now joining in with a complete roundup. Manisha, the big headline-grabbing story is gold, and gold is now above 82,000 rupees in India.
Oh, well, yes, it is. And, the gold is trading at an all-time high in the international markets as well. We've seen $2,800 announced for this one, as yes, the Indian markets have seen 82,000 rupees, and this is just on MCX. So when you go out to buy gold, you're paying much higher than that. Not just gold, silver is trading at a 6-week highs after Silver Institute came with a report saying that silver is headed for a deficit in global markets for a 5th straight year in 2025. And then you have seen many of the metal prices continue to gain as well. Copper is up on sharp covering. Zinc is gained because we are looking at a global mine output decline for 3rd year. And aluminum supply disruption concerns are supporting that one as well. And then it's not just about metals. The crude oil prices have seen some rebound also. This is the crude is headed for a 2nd monthly gain. The U.S. says that they could exempt crude from levies tariffs, and that has been supportive. Markets also will watch out for OPEC and allies meeting. That's on 3rd of Feb. So ahead all of this, we're looking at strength come back in case of commodities in the Asian markets right now.
And tomorrow for gold, Manisha, something could happen. I mean, import duty change, I think, is widely expected, right?
Oh, yes, absolutely. And that's the reason in the Indian markets, we are looking at a discount of $30 to $40 an ounce because a lot of people are trying to sell their gold ahead of that duty change. So, well, yes, buyers aside, dealers selling gold, it's quite a crazy market in India right now.
All right, Manisha, thank you very much for that. So, as commodities, we'll take a quick commercial break here. We come back with our first management of the day, PB Fintech, after their third quarter numbers. Yashish Dahiya, Chairman and Group CEO of PB Fintech, joins us in just a bit. Okay, welcome back. There's 30 minutes to go for the pre-open session. We have our first management ready. With us, PB Fintech is the company. Stocks come off from the highs, high-quality name. It's very strong revenue growth for a couple of years now, and this quarter is no different. So revenues were up 48%, but contribution margins were under a bit of pressure. We have Yashish Dahiya, Chairman and Group CEO at PB Fintech, with us now to sort of take some questions and run us through the outlook. Yashish, good morning. Great to have you with us here. It's always a pleasure. Prashant this side. Now, let's just start with premium growth if we can. So, it was running at 60% if you look at the first half of FY25. Actually, even in Q2, it was, north of 60%. It's come off a little bit to about 40-odd% now in the third quarter, October to December. Could you run us through what this was on account of and what kind of normalization should we see from here on over the next 2 or 3 quarters?
Yeah, so see, growth stays our priority and will do so. This quarter, on the savings side, we did not see the same growth that we saw on the previous quarters. So if you look at Q2, we had our savings business grew much faster than in Q3. So I think that had an impact. And of course, savings is a largish part. I think what continued to do very well was health. But even there, earlier we were growing at about 65, 67. Now it's more like 59. So clearly there is a little bit of, and of course our base is also increasing. See, long term, we say it's very good if we are able to grow at 30% on our core business. So anything north of 30%, I'm very happy with. 46 is quite an exceptional growth. Of course, I do agree that in Q2, it was higher at 60+%.
So, will we get to, Yashish, are we closer to this, getting to this normalized long-term 30% growth rate? No.
See, no one can predict more than 2 quarters in terms of growth. Yeah, right now it seems like we are good. And we will be well ahead of, that particular average for maybe the next few quarters. But, long term, this is the hardest thing to predict in any business, at least in our business, like in consumer business. I can't predict exactly by the year how much the growth would be. And what we can predict very well is what our profits will be. That is very easy for us to predict because that largely comes from the renewal base, and the renewal base grows at a particular rate. But what is impossible to predict is whether the growth will be 20% or 30% or 40% or 50%. And that's why we say that we are very happy with a 30% number. I think we will do better than that for some time.
Okay, so FY26, I mean, again, I'm not asking you for specifics, just to kind of give a ballpark. Should be not sort of 40% plus kind of growth for 26?
No clue. Nobody can say. If I had any clue, I would have told you. It's not like I can tell you that our profits will double next year. But what I cannot tell you is whether we will grow or not. Yes, our effort will be to grow. See, we have things that we can control and things we can't control.
Sure.
Growth is very difficult to control because there are too many factors in it. Profit is very easy to control and predict.
Okay, so profits to double next year. Yashish, hi, Rima here. So health insurance has been a key driver for you. How much did health insurance contribute to your premium generated and revenues in Q3? What was the growth here? And what could the share be, to growth going forward in FY26? Is it possible to put a number to it?
See, the great news is health, which is the most critical thing that consumers require. So if you think about it, middle class people, if you ask them which is the most important product to them, that's health insurance. So growth there, and specifically when the industry has been at about whatever 10, 12, 15%, growing at the rates we are growing, which is about 4 times faster than the rest of the industry, is very good. In terms of proportion, I think our health business would be almost a little more than 30% of our overall business in terms of premium. Of course, when you think of it from a net present value perspective, which means the lifetime value, it ends up being a little more than 60% of our business. And that's why I focus enormously on the health business, because I and the management, because it is the long-term driver of value for the company.
Got it. No, and I think that's very, very well put. So 60% of the NPV, 30% the premiums, right? On the health side.
Broadly.
So that remains.
Yeah.
Your ESOP charge has come down to 51 crores in the third quarter, Yashish. Where do you see this moving, and how will this sort of play out at an operating level?
I think now onwards, the ESOP charge will be largely stable. It'll be at about this number for a long time.
Okay. Your contribution margin in the third quarter has fallen about 400 basis points on a year-on-year basis. Could you talk to us about this?
Listen, whenever you grow, the way the rest of our businesses and our health business works slightly differently. And it's very important for anybody who's serious about our company to appreciate that. In most of our business, we make enough money in the first year to create a good contribution. In health, we do not. Health is a much more... So let me put it this way, right? If you wanted to take the net present value of health insurance, that would be almost equal to, let's say, X. And in the first year, you only make about 20% of that. So only 20% of your net present value comes through in the first year in health, while in every other business is between 70 to 90%. And what that means is, while you take on a bulk of your cost, your acquisition cost, your marketing cost, your sales cost, your customer service cost upfront, most of your revenue is backdated. And so the way the health insurance business works is that you actually make a bit of a loss on the first year, and then you make profits for the rest of your life. And thus, from a net present value, it's the best business, but from a margin perspective, it's the worst business to grow. And this, it's pretty basic. So I think we are very happy about the fact that our margins gone down, because it's been driven by the faster growth of health business. And that's a phenomenal place to be in, because that just bodes so well for multiple years in the future.
Yashish, last quarter you mentioned that you will strategize a plan for Bazaar.
Yes.
So what will be the strategy for it, and what would your aspirations be?
I think Bazaar, we are getting quite clear about what we want to achieve there. So far, we work off the credit score program. It is going to be credit score and account aggregator. So you're going to see it evolve into some kind of a personal finance tool, which does not do just credit. So it's going to be unsecured credit, but also savings, investments, that is going to come into Bazaar. But more importantly, I think we are headed towards a strategy where there'll be much greater integration between Policybazaar and Bazaar. So you think about it, today I sell a two-wheeler, I make 50 rupees. I sell a credit card, I can make up to 2,000 rupees. Now, how difficult is it to attach a few credit cards onto your two-wheeler sales, one way or the other, right? And similarly, the other way around, loans on insurance policies, etc., and insurance policies for loans. So I think there's a lot of integration. That's why banks sell so much insurance, right? So I think you will see that integration come through very seriously. Just give us maybe a month or so to detail that out to you.
Although banks will now sell less insurance if these changes come through. But that's another conversation. But fantastically explained, Yashish. And the earlier point also on the health side and contribution. Just a quick word on the cash in the books, which is now about 5,500 crores. What do you plan to do with it? Are you looking at acquisition
We don't have
activity?
any concrete plans there. We don't have any concrete plans there. It's good for a business like ours, which is high growth and high impact on society, to be very safe and have a very healthy balance sheet. So we are happy with our position. We have no immediate intention of reducing our cash balance. I think cash balance will grow. I would say next year we should add about 700 crores or so to our cash balance. So we will, by the end of next year, we would have crossed 6,000 crores. and I think that's a good place to be. It just means that for the investors, this is increasingly a very stable company, which has a lot of cash flows and cash in it. But it's also at the same time a very young company. Think of it this way, right? Think of an 18-year-old making a lot of money. It's that way, because an 18-year-old is not supposed to be making money. They should be just investing. So we're a very young company, high growth, and at the same time, cash generative already.
A special dividend or something at some point?
I don't think that way. Yeah, we are let's say too young at this stage.
You want to hold on to the cash for no, absolutely.
I think we may have some uses coming up, and I don't want to be in a position when we've kind of just done dividends and sort of are looking around. And we don't time things, etc. So it's not like if there's some buyback or anything of that sort. I don't think that's how we operate.
Just one last sort of question. You own about 4%. The CFO owns about 1.5% stake. Would you stay at this level, or would you look?
I own about 5%, and Alok has about 1.68 on a fully diluted basis. Sometimes because of what you are seeing, you're not able to see all of it. But minus 5% and Alok is 1.68. I think we should stay at similar levels because we keep receiving ESOPs, and as we receive ESOPs, there will also be some dilution. Both me and Alok may also have to invest something in the health venture. So I think in many ways, it should stay at about this level. I hope. I don't know.
And you're looking for investors in PB Health. At what stage is that at? You plan to hold about 25%, right?
We cannot be very specific. All I can say is I think PB Fintech is at this point struggling to get shares there. There's a lot of pressure on from other investors for PB Fintech to hold a little less than. So there's a lot of demand. There is a lot of demand. There's no doubt about that. I would say the demand is more than 2 times or 3 times the capital that we require. And so we're really selecting, we have selected the best investors. But see, I was authorized by the board to do these negotiations, I think on the 3rd of December. We are about 2 months into those negotiations. Just give me another 45 days or so, 30 days, 45 days, and I think we should have enough to announce. And at that time, what percentage PB Fintech has, what percentage other investors has should be quite clear.
And the overall value, I mean, what's the valuation? Would you be able to share that?
It's just a cash raise, right? So I think it's a bit flexible, but the capital raise should be between $150 to $200 million at the first level.
From outside investors. From outside investors.
Yeah, but overall, that's the capital raise for the thing, right? But there's a bit of flexibility there, right? So it could be less, it could be more.
Okay, got it.
And I'm sure it's not the only round. I think we will have a round 2.
You'll have more. Yes, absolutely.
Very soon after, and we'll have a round 3 very soon after. So I think this is the initial capital raise. I think at this point it seems like PB Fintech maybe less than 20%.
Maybe less than 20%. Got it.
At this point, it seems like that. So it's not even an associate company.
Okay. Got it. And we'll chat more when you are able to disclose more, as you said, maybe another 40-45 days. And we'll do that. Thank you very much, Yashish, for joining us with all of that. Really a great conversation, and look forward to our next one. That's PB Fintech for you, 1650 or so. And the commentary coming in from the promoter, Yashish Daya. So we have Siddharth Khemka with us. There's about 15 minutes to go for the pre-open session. Siddharth, thanks for waiting. Apologies. I trust you heard some of that conversation with PB Fintech. Any thoughts?
Yeah, I think if you look at on an overall basis, company has been showing a steady growth. Unfortunately, we don't have an official coverage on the stock to give you a final details, but I think at the space, if you see the digital economy, that is growing very fast, and in insurance, PB Fintech is doing I think it's doing a good job. In terms of absolute numbers, I think strong operational performance for the third quarter. And as we heard the management in terms of forward outlook and growth in some of the other segments, newer segments that they are getting in, I think market should be quite enthusiastic by that.
Siddharth, hi, good morning. Wanted to get your thoughts in on SRF. The stock reacted positively, was up 6%. And after many disappointing quarters, Q3 was finally a good quarter for the company. There was a conference call post-market hours. What did you make of it? Because I believe there is an upgrade here by you.
Yeah, good morning. So definitely, I think the chemical business, the fluorochemicals as well as the specialty chemical business have started to witness recovery. And going forward also, we are seeing demand recovery, pricing improvement, and with the company talking about better product pipelines, we are seeing strong traction in the domestic market and exports ramp up also being witnessed. Apart from that, the packaging business that is also showing improvement, and the technical textile business that has been continuing to do well, and we believe that the current momentum would continue. The segment was not doing well. We also saw results from Navin Fluorine coming in late yesterday. That also came out with very strong numbers. And overall, we believe that considering the healthy business outlook across segments, we are factoring in a strong growth, 20% revenue growth, and back of improvement in margins, almost 50% PAT CAGR over the next 2 years. And hence, we believe that the current valuation looks attractive given the improvement in outlook as well as growth. So we have upgraded the stock to buy. We had a neutral rating earlier, and we have set a target price of 3,540.
Sid, a couple of stocks quickly, if you can cover. Loris usually has disappointed, but yesterday was a big move on the upside. Any thoughts here? Hitachi, I don't know about valuations, but it was locked up 20%. We had the management with us yesterday. And on the other side, Voltas, I mean, big volumes and almost a 13-14% sell-off yesterday.
Yeah, so if you look at Loris, I think clearly the negative news flows with regards to the US aid with the ARV, which is your anti-AIDS drugs, that was becoming a big negative. And a clarification came in where the US said that they are going to give a waiver for this kind of drug. So basically, the AIDS would flow back for this kind of drug. So that becomes positive. If you see on the overall results perspective, that has been coming out pretty decent. We are not seeing much of impact there in terms of the overall business, and hence I think looks comparatively better. Hitachi, we don't have a coverage, to be honest. Voltas, pretty bad numbers especially from the UPC business, and margins were kind of weak, and that led to a sharp disappointment. Compared to that, if you look at Blue Star, that has been consistently reporting strong numbers. Even for Voltas in the RAC business, the room AC business, margins, the market share loss, that is also quite concerning. So overall, I think with these kind of numbers and especially the margin contraction in the UCP segment, the market share dip, I think it's a negative outlook, at least for the next few quarters.
Yeah, it's a hyper-competitive AC market, and Voltas has been struggling because of that. Cost of leadership, as some say, down 13% yesterday. Siddharth, do stay on. We need to slip into a very short break. On the other side, we'll invite Mitesh Thakkar and Shrikant Chauhan on the show.
Okay, welcome back. There's 8 minutes to go for the pre-open session to kick off, and we have Mitesh Thakkar now joining in with what he'd want you to do in terms of individual trades. I mean, and of course, the setup as well. Mitesh, morning. How to approach things? We've had a decent 400-point bounce from Tuesday lows. What's next?
Morning, Prashant. The bounce has been good. Now the key question is whether it was just a bounce or whether it is a sign of some kind of a reversal. We have a big event coming up, so that kind of makes things slightly difficult. But just on the price action basis, if you were to look at it, the Nifty needs to at least get past 23,350, 370 and close above it. Or till then, I think as a trader, you might just want to, sit back and observe how things are unfolding. In case we fail to do so, getting past 23,350, 370 zones immediately, then I think you might get a dip, which could be, as low as about 23,040, 23,000 levels. And we might get a reversal from there. That will complete some kind of a pattern formation on the downside. But for the time being, till we are getting past 23,350, I think I am, slightly off the markets. We have an event coming up. We have had a rally. We've had some good profits on the long side of the trade. Sit back and watch. If there's any positive event, then I think that could lead to a positive trigger, could lead to getting past 23,350. That's when the next bigger trade comes in.
Mitesh, hi, good morning. What about stocks this Friday morning?
On the stock side, I have more of buy calls. I have a buy on Hero Motors. Disclaimer: we have some minor positions on the call option side there. It was a recommendation yesterday as well. It did well. So today now can be bought afresh with a stop at 41.10 for targets of 43.20. A buy on Naveen Fluorine with a stop at 38.30 for targets of 40.50. A buy on IRFC. That was also a call yesterday. It did very well. The stock was up 4.5%, and today is showing signs of continuation. So buy there again. Now with a revised stop loss at 145 for a target of 154.5 and one sell call. That's on BSC. On a mild pullback of 10-20 points around 52, 55, 52, 60 zones. Take a short position with a stop at 53.40 for targets of 50.70.
Thank you. On Naveen Fluorine that Mitesh likes, there are lots of fundamental calls backing the stock. So UBS and Citi have raised the target price on Naveen Fluorine post the numbers. For UBS, it stands at 48.50. Citi has raised it to 4,500. And MK today has upgraded the stock to an add rating post the numbers. We'll get into a break. On the other side, we'll get the pre-opening rates. We'll also be joined by Shankha Banerjee of Dr. Lal Path Labs for their Q3 performance. Stay tuned. Welcome back. One of the stocks to watch today would be JSPL because the company announced an expanded capex program. So they've announced incremental capex of about 15,000 crore rupees, and that has spooked some investors because of the kind of return you will be able to generate from that. We're still in conversation with Siddharth. Siddharth, come in on JSPL, and how would you read this capex announcement?
Yeah, I think definitely that is something that has taken the market by surprise, and a lot of this capex that will go on could again lead to a increase in debt and lower returns in the near term. And if you look at the overall announcement, I think that has been two-pronged new capex on the cost efficiencies. That will be definitely positive. That is something that market will take positively. But the crude steel expansion, that is something again in this environment, I think will not be that positive. So market will take that a little negative. Q3 results definitely has seen a weak volume growth. But the overall outlook for JSPL remains positive on back of the overall growth margins. We await further clarity as to the new capex plans to access specific implications. So we definitely need to understand the details of the capex that the company is going to do.
Siddharth, do stay on. We've got a management waiting by to chat with us, Dr. Lal Path Labs. For Q3, the company's top-line growth was purely driven by volumes. Margins were slightly under pressure. We have Shankha Banerjee, CEO at the company, now joining in. Thank you very much for joining in. First, if you could guide on the volume growth, will the company continue to focus on volumes? Is that going to be the driving force for you? What could the volume growth look like going forward?
Right. Thank you for having me on the show. Firstly, for us, volume measures, there are two of them that we look at quite closely. One is the patient volume growth and another is the sample volume growth. So this quarter, our sample volume growth is 10.3%, which is more or less in line with our overall revenue of 10.7%. And our patient number volume growth is at about 3.8%, which is, and at a YTD level, we are at a 4.4% on patient volume. So I think our sample volume growth is really doing well. In terms of patient volume, pre-COVID, we used to have numbers in the range of 7 to 8% patient volume growth. And that's a number that we are definitely have in our sights to reach, in the future.
What about on margins? Because in the past, we've even seen margins of 29-30% for you. In the current quarter, it's down to about 26%, or even in the prior few quarters. What is the outlook on margins for Q4? And would you maintain your EBITDA margin guidance of 27% for FY25?
So Q3 has always been a structurally, what would I say, a slow quarter. And typically our H1 margins have been better than our H2 margin because a lot of our investments and other costs kind of start getting built up during the second half of the year. But even if you look at our YTD margin numbers, at YTD level, the first 3 quarters put together, we are at about 28%. So, margins are still quite healthy. And, the guidance that we have given between 27 and 28% for the year, I think for the overall year, we should be in that range.
Okay, so 27 to 28% margins for the full year. But are you focusing a bit more on volumes over pricing? Is that going to be the strategy? And what about price hikes? Because your peers have taken some hikes in the prior quarter, but you've been a bit hesitant to announce increases.
So, yes, our focus is definitely, for a sustainable growth, we would like to see, volumes also rise along with our revenue numbers. And therefore, it's been a conscious choice to, not take price increases. We are aware that in the market, there are other players who are taking price increases, but given our strategy of, looking at, a sustainable volume, really, underlying our revenue growth, we are still not looking at price increase in the near future. However, we keep reviewing the position, so it's not as if it's never. I think we will keep reviewing every 3 to 6 months. We review our position and then we decide accordingly. But we don't have an intention to take any price increase in the near future.
Do you fear that if you take price hikes, you won't be able to maintain a volume growth of about 10-11%? Is that how? Is that the market dynamic right now?
So it is not about whether we'll be able to maintain or not. I think, like I said, for a longer sustainable growth, we want to see our volumes inch up a bit more further. And then, as per our strategy, where, we are expanding quite aggressively into our tier 3, tier 4 markets, where a lot of competition is from the local labs. Pricing also plays an important factor in trying to get conversions and, growing the business in those markets. Therefore, we are consciously not taking price increases now, but we keep reviewing our position and we'll see, when we think that the need is there, we will also look at price increases.
Yeah, absolutely. Mr. Banerjee, good morning. Prashant here. Did we get through to what your expectations are for revenue growth in FY26?
So, this year we have said that we want to go better than last year. And last year we were 10.4%. Right now, I think we are at about 10.7% on a YTD basis. So more or less in the range of, say 11%, 10.5 to 11%, which we've been saying, for this year. So our next year aspiration would be to obviously better this number. And that's kind of, we'll be targeting a revenue growth, which is better than what we will achieve in this financial year.
By small margin, big margin, is there a possibility of a big delta there? Say closer to 15%? I mean, obviously everyone aspires, but is it looking like it could be in that vicinity?
So you see, revenue growth has multiple contributors. There is volume led, there is a mix change, there is a price, angle, and also there could be possible M&A angle. So right now, I think what I am talking about is pure organic growth without looking too many or considering too much of a price increase. So volume and mix improvement, we would like to do that better than what we end up this year.
And do you think next year you will be able to maintain margins within the 27-28% band?
You see, our long-term margin profile has been in the range of 26 to 27%. And, we are, I think we also spoke about adding, new infrastructure. So, opening 15 to 20 labs this financial year, which we are more or less, we are actually on track for doing that. And similarly, we may have a similar plan for next year in the same range of opening new labs. So overall, I think we would be looking at a range of between 26 to 27% EBITDA margins going forward on a sustainable basis.
Got that. Now, what you mentioned, right? The guidance aspiration is all based on organic, but there's always obviously the inorganic angle as well. You've spoken about this in the past. You closer to it? Closer to doing anything?
So, we've said that for us, South is a market where we are really trying to build our maybe base through inorganic opportunities. So, South and West are the geographies which we continue to look at. There is, some activity happening on that side, but as of now, there isn't anything that we are in a position to really speak about.
I see. So maybe South, right? I mean, West, you obviously did one acquisition earlier, but these are the two geographies largely.
Largely West and South, South and West, because South contribution to our overall business is still in single digits.
Very low.
So, that's one area where, and South in itself is a very large geography. You've got 4 large states, 5 large states now. So South is also not homogeneous. So, there are, geographies within that we are looking at currently. That's really a main focus.
The large market, because generally the perception is that primary healthcare, etc., is much better in that sense. Or that doesn't make a difference.
So yes, the healthcare establishments and the organized play there is better than maybe what we see overall in North. But still, I think the opportunity for M&A, etc., will be there, and we are looking at opportunities. And it's not as if retail pathology does not exist there. There is enough scope for doing retail pathology there as well. So that's what we are focused on.
Thank you, Mr. Banerjee, for joining in. Wish you all the very best. Thank you. It's been a good conversation. Let's get back to the stocks you should have on your radar in today's trading session. Upasana is joining in for more on Navin Fluorine and SRF. Upasana.
Good morning. First up, let me start with SRF. The company reported good set of numbers, which was mainly supported by growth in company's chemical business. Now, management commentary in the earning conference call remains quite upbeat, in which company says that the chemical business is witnessing a revival and is expected to improve further in Q4 FY25 due to sustained demand momentum from agrochemical customers. It also expects improved performance in Q4 from its fluorochem business, which will be supported by stronger volumes and better realizations, is what the company is guided. In terms of specialty chemicals, company says that the growth will be led by healthy launch pipeline of active ingredients, and it has also said that specialty chemical is seeing demand recovery, pricing improvement, and even better product pipeline. Now coming to Navin Fluorine, company reported upbeat numbers which were aided by margin expansion, and in its con call highlight, company has guided that it remains confident of achieving 25% plus EBITDA margin by Q4 FY25, and it has also said that the scale up across newly commissioned projects will be driving growth for FY26. Now it says that EBITDA margin expansion was mainly due to various factors such as higher utilization of the Dahej and Surat plant and operational efficiencies. Now, company's 3Q HPP performance was driven by better price realizations, product mix, while higher capacity utilization aided growth in company's specialty and CDMO business. Company has said that the couple of projects are in the pipeline and it expects some announcement in H1 FY26. And lastly, company is guided that it expects strong growth in its CDMO business in FY26.
Thank you very much for that. So now that we spoke about SRF, the upgrade there by you, what about Navin Fluorine? Numbers look good.
Yeah, I think overall the fluorochemical business has been seen a strong improvement for Navin. The HPP segment as well as the specialty chemical segment both have seen strong improvement in this quarter, and there has been a beat in terms of expectations. As we are seeing the ramp up in the Dahej and Surat specialty chemicals are likely to drive higher contribution in the coming quarters. Plus, if you look at the new Fermion contract, that is set to contribute about 30% of the exports 100 million target that the company has set, and we are expected to see an approval by April-May of this year. So overall, I think the tone is definitely positive. However, what we are seeing is that there is some moderation in terms of overall, despite the robust earnings growth, we are rationalizing our earnings expectation to some extent. We have cut the estimates by about 6%, and the stock is already trading at about 48-50 times 1 year forward earnings. So we see a positive momentum in the near term, but from a long-term perspective, we have still not upgraded. We have a neutral rating on Navin Fluorine. Would prefer an SRF where the earnings growth momentum is much better and sharper for the next 2 years.
Okay. All right, Siddharth. Thank you very much for weighing in on all of the stock advice today. You have a good day, and we'll connect again soon. 9:10 right now, and the market has settled in the pre-open with about a 47% gain on the Nifty. And L&T is actually the leader on the index, up about 2.5% after its numbers. Let's go across to Mitesh and take a look at the 9:10 call. Mitesh, which one will it be?
I had Navin Fluorine as my recommendation, and I think, that's the stock which is opening extremely higher. So not sure whether we can recommend that, but then let's look at IRFC as a buy for targets of 150 for now.
Okay, Navin indeed is surging. Pre-open suggests almost 7% higher. Got it, Mitesh. Thank you very much. But L&T is also all set to open higher at least. Let's just revisit the numbers and the street view on the stock post Q3. Vivek?
Well, that's right. Like you mentioned, the numbers were a miss. Core margins coming in very disappointing. But what the street like clearly is the fact that order inflows have come in much above even what the highest street estimate was. Along with that, the company, remember, has maintained guidance across all key of its parameters. So order inflow guidance of 10%. The company hopeful of actually beating that, given the fact that both order prospect pipeline as well as the ask rate for Q4 is very limited. Now, along with that, the company, which had given a core margin guidance of 8.2%, the company has retained that guidance despite clocking in only around 7.6% on the core margins in the quarter gone by. The ask rate is quite steep as far as margins are concerned, but the company is confident of delivering that in Q4. Now, along with that, when you're talking about the order inflow, 1.16 lakh crore is the actual number that the company has delivered on a consolidated basis, which is the highest ever order inflow. And the order book consolidated stands at 5.46 lakh crore, indicating that there is significant order visibility as well as revenue visibility. Our top line growth guidance of 15%, the company again over here says that if the execution is on track, should be able to surpass that. So muted margins, but strong order inflow as well as hopefulness as far as increasing both top line guidance as well as beating the order inflow is something that the street likes.
Right, let's just look at the stock in terms of what L&T is doing in the pre-open. At the end of the pre-open, there's a minute to go, minute and a half to go for the market open. 2.5 higher on L&T. Look at Tata Consumer if we can quickly. You'll hear from the management as well at about 9:30. About a third higher. Shree Cements next. Biocon, JSPL. I mean, just the stocks, the top 10 stock list that we had. Shree is up about 1. Biocon will come up on your screen. JSPL, Bank of Baroda, some of the others. And maybe a Kalyan Jewellers as well, right? Which is actually, JSPL is down 6.5 as we indicated earlier. Vivek was talking about more details required on that expansion number that were put out. Kalyan is up about 4.5% at about 460 odd. And PB Fintech, right? We had that detailed chat with the CEO, the promoter basically, Yashish Dahiya, 1.5% higher on PB Fintech. And Navin Fluorine, of course, I think we highlighted, which was starting up. Polycab, I think, is another one which we should just briefly look at. I think GST searches at their premises. Polycab is not new to this, right? I mean, remember that big swoon that Polycab as a stock saw, I think about 2 years back. It was a big correction and then it came right back. I think there was IT searches at that point, if I remember correctly. But we'll address all of that and more in a bit. Look at the indices first. We've got the first rate starting to come up on our screens anytime now. 47 higher in the Nifty. The sensex is up about 130 odd points. Mid-cap index is up about a quarter. And so the Nifty bank is already slightly lower at this point in time. The Nifty heat map, I mean, just the 50 stock sort of picture at one snapshot view in terms of how many up and down will come up anytime now on your screens. But it's kind of slow, and it's a slow start, let's put it that way. Okay, it's more up than down, definitely. And some of the gainers and losers are on your screens now. So 50 odd points on the Nifty, 23, just under 23,300. Sribi.
Okay, well, let's look at what's happening on individual movers and shakers. L&T, the market is actually looking through this margin issue, because I guess the company's been guiding that it's sort itself out over the next couple of quarters. The order book intake is the one that the market is focused on, 3% higher on that stock. Tata Consumers numbers are also being well received, almost 3% up there. There's some buying on Titan, up about 2%. Then some tech names come in. Wipro, Infosys, Tech Mahindra, these are stocks on the upside this morning. A little bit of pharma as well in the mix. Cipla, Dr. Reddy's having a good start to trade today. So that's largely on the upside of things. On the downside, the Bank Nifty, by the way, is decidedly lower already, 200 points lower on the Bank Nifty. Let's see what the individual constituents are doing. ICICI Bank about 0.5% lower, HDFC Bank 0.3% down, IndusInd, Kotak Mahindra, all of them down, but basically between 0.25% to about 0.5%. Other stocks that are lower are some of the metal and material stocks, JSW Steel, Tata Steel, Coal India. These are names on the lower side, even ONGC for that matter. So basically commodities are out of favor. Banks are looking slightly weak. It's consumer stocks all the way. Tata Consumer has now dethroned L&T to be the Nifty winner, 5% surge on Tata Consumer. But I guess even more earnings reactions and pretty big ones playing out in the mid-cap market, Rima.
Indeed. By the way, for Wipro, they won a multi-million-dollar deal from Etihad for IT transformation over a 5-year period, and that's pushing the stock up. But let's get to the mid-cap movers. On the way up, it's Navin Fluorine all the way, 7.5%. Early volumes are very, very high. Parag Milk, 4% up. There is a margin expansion for Parag Milk. And some of the other stock gainers include an Astral, again, earnings reaction. Biocon, the street was a bit disappointed with the margin performance, but the stock has opened up with strength. Ajanta Pharma, even Kalyan Jewellers, it's down 40% so far this year, but on the back of its numbers. And the company is also talking about debt repayment in the upcoming quarter. And Kalyan Jewellers has had a good start to the trading session. On the way down, you've got Concor under pressure. Again, here, margins have declined for the company. The overall EBITDA is down 10%. So Concor has down nearly 5%. So that's a big loser today. And Prestige Estates, we should get that stock up for you on your screen, 5% down. Bank of Baroda, Abhishek was telling us that it's been a subdued quarter. NIMs have contracted. Bank of Baroda is down nearly 3.5%. And OneSource Specialty, where there is an expected block deal of about 1,200 crore rupees, some supply pressure, perhaps. So OneSource is down nearly 2.5%. Some of the others, Waaree Energies, 12% up on Waaree Energies, again reacting to numbers. Wockhardt, there is some announcement by the company on the exchanges, so that's pushed up the stock by nearly about 6.5%. Suzlon Energy has been having a couple of good days now, so Suzlon Energy is up and about in trade. And Whirlpool, another 5% gone on Whirlpool.
You know, the biggest volume-led gainer is Waaree Energy, right? 12% higher, and stocks at about 24.66 coming through there. I mean, actually, it's possible that for on the, I think, solar wafer import duty, etc., tomorrow, perhaps in the budget. We'll have to see. But I read that as one of the sector-wise expectations, which anyway this time around. They're quite low. Suzlon is at number 2 in terms of volume-led gains, is up about 4%. Got smashed on the way down, but coming up almost about 60 rupee levels. L&T continues to gain 4%. I think we mentioned that. Navin Fluorine, etc. Hitachi Energy is up another 5% after yesterday's 20% circuit move. You know, the question for many of these names, of course, is valuations for Hitachi Energy. And we discussed this yesterday as well. We got what Premier Energy, again, on the renewable space, 5% higher. Tata Consumer, 3.5% higher. Blue Jet, Biocon, Deepak Fertilizer, Wockhardt, Astral. These are all between 2 and 4% up at this point in time. 2:1 in terms of advances to decline ratio. And We've got, the first rates coming through. Prestige is a 5% cut, so that's kind of stands out. And KPIT is down about 2.5% as well. We had the management of KPIT with us yesterday. Stock was, of course, a big mover on the upside, but it's seeing some profit booking coming through now. Samir Arora is our market master of the day, founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here as always. Thank you very much.
Good morning.
Good morning. Good morning. I was in the morning, we were just chatting, and I was saying that I should keep expectations low. And my co-anchor Surabhi and Rima was saying that I'm being too philosophical. If we beat expectations, then the market will do well in any case. If it doesn't, then you're not too disappointed. How are you looking at it, Samir?
This we are talking about expectations every morning from the market or from the budget. So I have higher expectations every day from the market than I have from the budget. Every morning I think now it should be okay. Yeah, so budget, the thing is, for whatever reason, whether it's discussion, pre-discussion, or these corporates meeting and then, making us feel in the past, that's because they made this representation as if that is about to happen. This time that discussion has also gone away. The chatter has gone away. So therefore, in that sense, there is no expectation. I agree.
It's actually so exciting for Samir, by the way, that Samir is reaching office. What time tomorrow, Samir?
Tomorrow is a holiday, so I don't come to office.
No, it's not a holiday.
It is a holiday.
No, it's not a holiday.
It is a holiday in Singapore, so I can see I can see you guys from home.
Doesn't matter. Markets are...
We have, every time these guys, and I've been doing it for 20 and 30 years. In the olden days when I was in Alliance, I used to fly to India for the budget and we would sit in a room. And I don't remember every episode, but literally every year we have lost money trying to trade that day.
But Samir, and to that point, I still remember all our conversations last budget, July 24. So usse to acha hoga, because that's when 10% became 12.5%, right? So it can't be.
Interpretation.
Oh, okay.
I'm talking about my interpretation trading that day. Only in Feb 18, I got it perfectly right when the capital gains tax was increased. And that day in our long short fund, we shorted nearly 20% index of the whole fund. Okay. So quite many hundreds of crores we shorted. That turned out to be all right. But broadly speaking, on these individual stocks, there is this allocation, that allocation, which I used to do more in the olden days, or railway, something has increased or something has increased. All that has been not 100%, 99% given up.
No, because those are budget day trades. So therefore, thank you for the candor.
Not work.
Exactly. So it's one day here and there, and then it fizzles out. But, coming down to...
Just to finish that point, it's on the day of the budget. Even if you're right, sometimes you're wrong. Because, you'll be right for the first half, and the second half, it could be very different. It'll turn, and it's happened so many times.
Yeah.
My best story is that I was in the CNBC office in Singapore on the day when this retrospective tax on ITC or whatever was introduced, and nobody knew about it. And I said, very good budget. And it actually was the worst budget we've ever seen, or at least in many, many years. Because we didn't know about that while the talk. And that's why you don't see me on budget day on TV. I come after budget.
No, but I remember, and you're being so candid, and we really, really appreciate that, and on live television. But must say, now to come back to the larger philosophical point, Prashant has been telling us to just keep expectations low. But I'm saying that in July, when capital gains tax was increased, the market had to deal with a real blow. At least no one's expecting, that kind of a shocker this time. If anything, market has got its hopes up again. I'm hearing people say lower STT because STT collections are now touching almost 45,000 crores. So on taxes, are you, hoping for or expecting anything realistically?
I'm expecting, but it may not be material. So I am thinking that since the chatter is there and it is logical that the government has given some incentive to the corporate sector through lower taxes in 2019, and they've done something for the lower this thing in terms of giving food and subsidy, and the states are giving, that you might do something for the middle class or for the taxpayer. And that also is coming now, but I've been saying it for the last 30, 40 days, that, there is some scope, maybe $4-5 billion, say 30, 40,000 crores. But if you divide that by number of people who may get it, say, I don't know, 2 crore or 3 crore taxpayers, it'll come to 8-10,000 rupees or something like that per annum. So you can get that much. I think it's possible to make it a little fair, and because the chatter and the people getting upset nowadays, at least on Twitter and others, which anyways middle class guys on Twitter, they are all feeling a bit upset in life, and I can see that because I am a lot on social media. Yeah.
No, why wouldn't they, Samir? Na? Because in the last budget, again, and to go back to that point, the super rich got a surcharge relief. Now the super rich can be in the new regime. 43% came down to 37%. Middle class didn't get anything. So maybe fair point. But Reema,
so that's what I'm expecting. But I was talking when we were talking that what do we do with it? Okay, suppose we know, suppose we think and it comes. Then what are we supposed to do with it in terms of which stock to buy? We said we don't know. Therefore, we said let's forget about trying to figure out, because even if you know this, what will you do tomorrow? Will you buy a consumer staple stock or will you buy Zomato because you are?
Will you? Will you if there is some sort of a reasonable relief to at the middle level? How would you not trade it that day, but in general? Would you make any changes to the portfolio?
I don't think it will matter, because it's let us say in a family you're getting 600-700 rupees per month. Okay. Now what will you do with it? Because inflation is there. Secondly, the basket of people have changed. Will they order one more time Zomato, or will they change or buy an extra lipstick? Who knows? Because in the olden days, these things were much simpler to do. Or maybe there'll be a telecom price hike after a few days and some of this money would have gone away or whatever, 600, 700, 300, 200, whatever. So the point is, you don't exactly know what to do if the amounts are otherwise small, and nowadays the basket is a bit wide. So you will say good and thank you and on behalf of everybody, and it'll help the consumer sector. But now which stock will they go to McDonald's more? Where, by the way, I own that stock also, which has been a dud for 2-3 years, but before that was good. So will you go one more time to Westlife? Who knows? But
Samir, as a broader call for consumption, do you prefer staples or do you prefer discretionary stocks like the Trends and Nykas and Zomatos of the world?
I don't consider Zomato as a discretionary stock, in the sense it is just replacing what you were doing, which is why we like those kind of stocks where you are not trying to say that the customer has to spend more money. It is just reorienting. That's why we like the quick commerce. He's not spending extra money. He's just making it convenient for him to buy this via this channel versus that channel. I don't like the consumer staple because I think that the consumer basket has expanded to beyond just upgrading a soap or something because monsoon has come, which was the old formula. In the old formula, when I was in Alliance Worli, we would see if there's rain outside our window in Bombay, and then you would go and buy levers and you'll make some 5-10% in 6 months. So those days are gone. Now you don't know. There are private labels. And then the customer himself or the consumer himself has or herself may want to buy something which they can show on social media or in a photograph or in a selfie. Some of these things, who knows? Big picture.
Those sound like simple days. No? Samir is saying you could watch the rain and then think that, okay.
Yeah, those days were great days. And that also in Bombay.
Easier to make money, now it's too complicated. Don't even have to step out for a channel check.
Outside our office.
And then you buy a lever. Fantastic anecdote from the past, Prashant.
No, it used to. It used to be. It used to happen. I think even 10-15 years ago. But of course, not anymore. Samir, but what is the market looking like? Has the structure weakened a little bit? Are the go-go times behind us? What is your sense now? I mean, budget will come and go.
Market structure has become right now, this month. By the way, today morning I was saying that this month has been very strong. If you call this month the Chinese New Year month, because that was 2 days ago. Depends on what is this year. But this year, in terms of the calendar year of the Western world, has been tough because the companies doing badly have been penalized much more than you would normally expect. So if you are slightly off, they are down 8-10%. But over time, somehow we are not feeling negative in our bones, maybe because over time we have eliminated these stocks which used to have either very high leverage or some personal leverage or shares that were leveraged, or something where it was a government type stuff where, an order is not coming and so the guy is bleeding to death. But still, this has been a tough month. but somehow I'm not feeling that negative because, as I say, the world is doing well. And if the world is doing well, we are not such thorough idiots as a country that we will be negative when the world is positive. You may lag them, you may underperform them, but you are not supposed to have negative performance. That is not what I have seen for so long. And also, the flows still come. Even we, as a small mutual fund, still get flows. We even get flows in our PMS, in our AIF, in our offshore long short fund. This month, actually, we got more than 25 million in our offshore fund, which, normally don't get in a sort of a bad phase. But the world is not going to give up so easily because the world otherwise is happy in life. So they can be a little unhappy here or there and that.
No, absolutely. But is there a bit of a factor change in terms of what will do well from here, or you think it'll be the same? So, people were chasing high growth and ready to pay very high PE multiples. You think people will now, and one should look at slightly maybe steadier growth. You don't have to go for the...
So the point is, our formula always has been that we want both hands. We are not such dumb people that we can, in a country which is 1% of the world, say we will analyze only 30% of that market. So we have a few stocks which are of this high growth, like, say, the one which you're talking about, Policy Bazaar, growing, say, 40%, but has high valuation, but it looks that it can grow like this for long. And on the other hand, we'll also have these ICICI banks and HDFC banks and also these IT guys, which if they grow 2% instead of 1.8%, the stocks go up a lot. So I don't want the market to decide for me. I will have a mix. And maybe on the margin, you will say, okay, based on results, buy this more or that more. But I am not going to be a prisoner to the market that I only buy this and then I will wait 5 years for my turn to come. And then I will make a lot of money and outperform. And then again, the guys investing that day will be underperforming because they are coming when that cycle is doing the best. There is no need when you are managing a small country in the world where the rest of the world fund managers can invest in 40 countries and in 30 instruments and in debt and in commodities. And I, even within India, can't be at the simultaneously buying one Zomato and one HDFC bank.
Okay, so it's a buffet. So
package,
have a make a nice plate, which I think you've done. Samir, I don't think we can convince you to come to office tomorrow. You enjoy your holiday, watch us on TV. But Monday morning is when we speak
Monday
again.
morning, I'll see you. I would have analyzed all what your guests say.
Lovely.
Then I will conclude what I think.
Thank you very much.
Brilliant, and we look forward to that Monday call, Samir. You have a fun Saturday watching us on the sidelines. Thank you so much. Well, the topic at hand is really consumption and can the budget spur it or not. Our next guest is actually joining in to talk about the third quarter performance. We'll do that, but also talk about this big consumer issue. Tata Consumer is the company on the radar. Overall, the third quarter results were largely in line with expectations. International margins came in healthy, but there has been some pressure on the India business margin, and that's because of the rise in tea prices. To talk about this and more, we have with us Sunil D'Souza, Managing Director and CEO at Tata Consumer. Mr. D'Souza, thank you so much for joining in. We have so many questions on that margin pressure, on the outlook for the beverages business, etc., etc. But I want to start with something that the previous guest was just saying, considering it's all eyes on budget tomorrow, and the hope is that there'll be some relief in the form of, income tax changes. But some of the guests, what they've been telling us is that a small marginal relief of, say, even if it's 1,000 rupees per month at an average for an individual, does that materially change anything for consumer companies? Some of the market experts say perhaps not. But you are sort of running the business, so you tell us, will some sort of a small relief on income tax really improve demand for you?
So I wouldn't try to forecast, or I wouldn't try to make policy changes in a subject which is beyond me. But all I can say is, I think, and we had alluded to this last quarter, I think there is probably the high interest rates, slightly higher inflation, slightly lower government spending is impacting overall consumption in the economy. And any measure which goes to elevate that, we would welcome it. So from our perspective, I think we've delivered a decent Q3. If you see the volume growths across the place, in a very good place. India margins, as you rightly pointed out, under a bit of pressure, but that's primarily to do with tea prices. Tea prices have gone up about 25%, and we've only priced in about 40% of that. But remember, Tata Consumer, we are not playing for this month or this quarter. We're building a FMCG powerhouse of the future, and therefore we remain focused on building long-term competitive strength. We have grown, while there has been pressure on the margins, tea volumes have grown by 7%. And in salt, where we took a significant price increase, we've again grown volume. So we remain pretty confident of where we are. Consumption boost would definitely help our business going forward.
No, absolutely. I mean, the volume growth has been pretty good. The revenue and top line growth for across the businesses has been pretty good. For Starbucks, it's 8% year on year. For the India Foods business, the growth is about 11%, I think, which is well along expected lines. But just to complete that point on volumes, how confident are you in terms of these levels sustaining? Because those who want to nitpick, though, I mean, the stock's doing really well today, the market loves the numbers, but there are those who will say that perhaps the expectations were running even higher, specifically from, some of the newer businesses, some of the recent acquisitions. So on volumes, what can you guide as we step into the new fiscal?
So our guidance doesn't change from a mid to longer term. We've always maintained salt and tea to be growing mid-single digits and a couple of basis points on pricing. Our growth businesses, which includes the organic businesses that we had getting into last quarter of Soulful, Nourishco, and Sampann, we had guided for 30% growth. And with the Capital Foods, that's Ching's, as well as Organic India coming in, we have said medium term also growth businesses will grow 30% and contribute to 30% of the portfolio. So we remain pretty confident of that. And there is a bunch of reasons for that, because we've done some basic work. My distribution at the front end has expanded significantly. We've got roughly 30% more feet on street with split routes to give focus. A. B, we've strengthened our logistics at the back end and digitized to a large extent with the auto replenishment system, permanent dispatch plan. We've got a new front end app for the sales team. We've focused on the channels where the consumer is moving. E-commerce has been growing at 59% for us, and it's now larger than modern trade. Quick commerce is 50% of that business. That's where the consumer is going, and we are there. Innovation has been firing for us on all cylinders. So all in all, I think we're in a pretty good wicket.
That's very interesting to hear that e-commerce is now a bigger channel than general trade for you. And this is, telling us about the times that we're in.
Indeed. Mr. D'Souza, just getting back to the earlier point about tea prices and the fact that they've gone up 25%. You're saying you've only accounted for 40% of the tea price hike so far. And what does that mean in terms of just margins for the near term, say Q4?
See, overall, if you looked at Tata Consumer EBITDA margins, we were down by 210 bips. Almost all of that I can attribute to the pressure on tea prices. Tea prices, because of the two droughts and therefore the supply-demand equation going out of whack, went up by about 25%. Overall, we take price hikes calibrated to make sure while we are trying to recover margins, we are not losing competitiveness. So we've done that. And therefore, we've recovered only about 40% of the tea price hikes. And not all of it has flowed in last quarter, because we've been taking consistently and will continue to take price hikes to try and mitigate that. But remember, tea is also a cyclical commodity. Starting March, April, the new crop will start to come in. And when the crop starts to come in, assuming that the crop is good, we will have hopefully an increase in margins. Or if the crop is not good, industry will start taking price increases to mitigate that entire piece. So from that perspective, I would say the pressure on margins is a short-term perspective. We remain focused on growing the business for the longer term. So while there was pressure on margins, we have managed to grow tea volumes by 7% and value by 10%. So I think we will react to pricing, to costs, and make sure that we take calibrated price so that we're not giving a shock to the consumer. We're gradually taking it up.
So do you think in Q4 also, because you are taking a calibrated approach to price hike, margins will come under pressure compared to Q3 levels? Is that the possibility?
So the heavy lifting of the pressure, I think, has happened in Q3. Starting Q4, remember in Q4, there is hardly any tea plucking in North India, and therefore there is no supply coming in. So we have inventory sitting in at a certain price. We will take calibrated price increases apart from the increases of the last quarter flowing in. So margin profile will become slightly better, but will remain under pressure from a longer term normative where it should be. I think middle of Q1 to about middle of Q2 is when you will start seeing the tea margins coming back.
Mr. D'Souza, hi, good morning. Ching's and Organic India, the run rate is at about 850 crores for the 9-month period. Could you give us a sense of what we are looking at for this portfolio for growth in FY26?
So overall, like we said, the growth businesses for us will contribute 30% and grow at 30%. So Ching's and Organic India is part of that. Remember, we bought this business with a very clear business case, which stated that we can grow the business faster than the original owners and more profitably. The more profitably piece, I think, has already happened because we've taken out significant costs. And if I don't add the amortization that we do, we're significantly ahead of where the businesses were with the prior owner. So from that perspective, we are in a good place on structurally. So I think we've taken about a couple of quarters to understand the businesses. They're slightly different from what we operated. Ching's, for example, is processed foods, value-added products. The frequency of buying is different. The commodities that go into it are different. There is a significant export business, which we took time to understand and build. Organic India, there is a huge supplement portfolio which is not distributed in India. In the US, it is the Amazon process which we've got to build. So we had a bit of learning, a couple of quarters. The good part is this quarter, the business has stabilized. While Ching's has grown marginally, Organic India is more or less there. We do expect acceleration starting Q4. Also, adding to the fact that we had committed that we will start a food service distribution to take advantage of Ching's, and we will start a pharma distribution to scale up Organic India. For both these, we ran pilots. We ran pilots in 2 cities for food service, which we now already starting to expand to 16 cities. And for pharma, we ran a pilot in 10 cities, which was fantastic results. And we're now expanding to 40 cities. So innovation will come in, distribution will start expanding to newer channels. We've understood the categories better. Brand building. You would have seen the new Kurkure Ching's product out there in the market. That gives us a fantastic sampling platform. I mean,
right. Right. And just 30 seconds, any new, any more acquisitions, any new categories?
So in our new strategic profile that we've...
Go on, sir, go on. We can hear you.
Yeah. So from a strategic perspective, we've sort of tweaked the pillars for strategy for us. And one of the pillars is focus on new businesses. So apart from digesting and creating value in Capital Foods and Organic India, we remain focused on looking at opportunities that there are in the market. While in the short term, we will focus on delivering value against what we have already acquired. Going forward, we remain open to organic as well as inorganic growth.
All right. We leave it there, Mr. D'Souza. Thank you very much for your time. Pleasure, good luck, and speak to you soon again. Thank you. Well, we'll take a quick commercial break here. 70 points higher on the Nifty. And look at Hitachi India Go. I think 20%. The recent low on Hitachi was 8,800 rupees. It's at almost 14,000 now in 3 days flat. So that is a powerful rebound coming through. Take a break. See you on the other side. We'll have the management of Max Healthcare and Prestige Estates to talk to us about numbers and the outlook. Okay, welcome back. Lots happening in the market in terms of single stocks, and it's another 100 points on the Nifty. So which means from Tuesday's low, the Nifty is up almost 500 points now, but this is still the first hour today. Max Healthcare is the next company which is with us now. Reported a strong set. Revenues and profit after tax came in strong, but average revenue per occupied bed has been slightly subdued. Let's talk about this and more with Abhay Soi, Chairman and Managing Director at the company. Abhay, good morning. Great to have you with us here on CNBC TV18. As always, Prashant here. So let's just start with that RPOP question. Slightly subdued, I guess, new units responsible. Not exactly bad news for patients, but as an investor, I've got to ask this. What was behind it, and what are you seeing from here?
So, we've had, in the existing units, we've had 8% growth of RPOP, which is in line with what has been in the past as well. So, no complaints over there. Whilst the new units, and you're aware that we acquired 3 new units and we started a new greenfield venture. So there are 4 more units that we started last year. And all of those obviously initially are going to have play on lower RPOPs. And that is what has dragged the overall RPOP down. So like I said, I think, that's exactly why we bought them. That's exactly where the opportunity was. Although there's been an increase in EBITDA, we've more than doubled EBITDA in the last 9 months, even on a Q-on-Q, on a year-on-year basis for this present quarter. There's been an increase of 94% on EBITDA in the Lucknow unit, as well as 25% on the Nagpur unit. Besides, we've broken even in a space of 6 months, for the Dwarka unit. But, they've obviously dragged down the overall RPOP. Having said that, we still had an EBITDA increase of 32%. So I think that's the positive takeaway from this.
Dwarka, what's the picture looking like specifically for that one?
Specifically for Dwarka?
Yes, Dwarka. I think that's the last one which came up, right? After Lucknow and Nagpur, which came on earlier.
Well, the last one has been the acquisition of JP Hospital, which happened in October. So that's too early to call. I have no doubts that JP will go the same way as Lucknow and Nagpur have. We've had great success over there. Dwarka, which we started in July, typically, and that's a greenfield. Typically, a greenfield takes about, as you're aware, 18 months to 2 years to sort of break even on EBITDA. We've broken even in the month of December. So that's within 6 months. Of course, the quarterly loss for it was 5 crores because the month of October and November was sort of still on ramp-up stage. But in December, we broke even. And, we believe it's only going to go stronger from here.
All right. Abhay, hi. Good to have you on the show. Speaking about the new facilities and the expansion, I just have a question on, Thane as well as Punjab. Thane as well, I think it's a 500-bed facility that you're setting up. You're adding more beds in Punjab as well. So all things put together, how much will you be spending on CapEx? This year is almost ending. I'm not sure. Some of this perhaps runs into the first quarter of next year. And how do you manage the balance between debt and cash? Our colleague who tracks the company was telling us that the debt is around 1,600 crores right now. So how are you funding this expansion?
So both these are built to suit. That means we have local partners who will be developing, who have the land, who will be making the land and building, and will be leasing it to us. There is no capex towards land and building. Eventually, we will be contributing in terms of the medical equipment over there. And of course, a basic deposit to tie in the lease. So these are lease assets. These are built to suit. Commercial real estate leases normally run at 8 to 9% cap yields, whereas our ROCs are 35% and northwards. So you can imagine we've leased it at those sort of commercial values and enjoy higher ROCs without any capital expenditure towards them. There won't be any capex towards these 2 facilities over the next, till they get occupation certificate and whatever else.
Oh, okay. So that's good. And by when do they start contributing? And what are the timelines for Thane? Dwarka, like you're saying, is already break even. So when do you expect to see higher occupancies and maybe higher RPOB in Dwarka? And also with Thane and Punjab, how many months or how many quarters before they start contributing to the top line?
Well, these are greenfields, both of them. So these are asset-light greenfields that we've entered into. Thane should take about 3 years for construction, and Mohali, Punjab, Zirakpur should take another 24 to 30 months for construction. So it's and like I said, during this course, it's asset-light model. There's no contribution from our side. It's the developer who invests in the land and building.
Right.
What about Max Lab and Max at Home? We have the current quarter's revenue, but how would you be scaling that up? Say by the end of FY26, what would the quarterly run rate look like for both of them?
Well, both we've been, generating, we've been growing at a CAGR of 24-25%, for past many years now. And I think that trend should continue unless we were to look at some inorganic growth opportunities over there. Max at Home, unfortunately, is the largest home care business in India. It's perhaps the only profitable one in India. So there are very far and few opportunities to acquire. So it will be organic growth. But as far as the diagnostic is concerned, if we get decent bolt-on acquisitions, then we could consider them on a case-to-case basis. But, sans that as well, it's been growing at a 24-25% CAGR. And we believe that should be the run rate going forward as well.
Got it. Abhay, I remember sometime last year when we spoke, you said FY26 will be an explosive growth year. We're closer to 26 now. So looking very strong, super strong?
Looking super strong. We are looking at, commissioning 3 of our brownfields in the first quarter itself. April, May, June, we will have 268 beds in Nanavati in Mumbai, which are getting commissioned. We have 400 beds at Saket in Delhi, which get commissioned, and 155 beds in Mohali. And brownfields have a very good amount of operating leverage, so they contribute almost immediately to both the top line as well as bottom line. Followed by December in 26, where we should be commissioning our semi-brownfield, which is in Gurgaon, which is another 500 beds. So we have a very exciting year ahead. We've grown at revenue's grown by 34-35% this quarter. EBITDA has grown by 32% this quarter. We are now entering a strong quarter, which is the Q4, which is typically the strongest quarter of the year. So we believe and we hope this trend continues. And then by quarter 1 next year, you'll have all of these new sort of brownfields kick in. So I think I'm looking forward to a very good 6.
How many beds in total, Abhay, in FY26 between the first quarter and then December?
So I think collectively we should be looking at about 14 to 1500 beds.
And Abhay, the margin profile, because as you explained, a lot of operating leverage will kick in. These are brownfield expansions. So the margin improvement that we can expect, say, by the end of first quarter, FY26?
Well, by the second quarter, I think, in the first quarter, while it's still opening, you'll have ramp up. So you'll have, you may have static margins in the first quarter, but yeah, definitely improvements thereafter. So, I have no doubts on that front.
Okay. Thank you. Thank you very much for joining in. That's the word coming in on Max Healthcare. Moving on now to Prestige Estates. Now, they reported a muted Q3. The company's sales have fallen by 43%. Irfan Razak, Chairman and Managing Director of the company, is now with us on the show. Thank you very much for joining in. So in the first 9 months, you've managed sales of about 10,000 crore rupees. But when we last spoke, you had guided for sales of 25,000 crore for the full year, which means if you want to achieve that guidance, in Q4, you need to do 15,000 crore. Do you think it's possible, or are you looking to lower your full year guidance on sales?
Good morning. Yes, we have done 10,000 crores, which is the positive. And I believe that we have 5 projects that are waiting for all regulatory approvals like RERA and other things. And there are 5 different cities, that is Bangalore, Chennai, Hyderabad, as well as in Mumbai and NCR. Now, once these RERA approvals come in, RERA numbers are granted, I don't see any reason why we cannot cross that number which we have guided. The good news is all these projects are approved by the authorities. It's only the last mile RERA number that needs to come. And it's imminent, and I think it's come. The demand is there. We get that traction. We get the feel from the market that people are very keen to invest and buy their homes in these projects. So I think we should cross this. And the only disclaimer is, in case these RERA numbers get delayed by a couple of weeks, then it'll just spill over to the next quarter.
What's the combined potential of these 5 projects for which the RERA approval is imminent?
See, we have starting, if you'd like to know the total number, it's there. But then if you ask me, there's 52,000 crores worth of value of inventory that can come in once the approvals and the RERA comes in. But out of this, if I take a breakup, it's about 5,000 in Bangalore, it is 5,000 in Mumbai, it is about 10,000 in NCR, and 3,000 in Chennai, and another 3,000 in Hyderabad. So this is the sum total of this that will be launched in as soon as we get these RERA approvals. And there is demand. The customers are pretty keen. In fact, it's like a pent-up demand that is there. Of course, physically we should be able to do, and pretty much our experiences when we do a launch, at least 30 to 40% is sold off the shelf almost immediately. So we are hoping that this will happen in the sense that the regulatory comes in. We are in an environment where we have to have that discipline, and I'm very happy that discipline is there. And I think we should be able to work towards it.
Mr. Razak, good morning. Prashant here. Good to see you. So this is so the numbers the breakup adds up to about 27,000 crores. That is your share from the saleable. Yes. Okay, that 52,000 crores is the total kind of project value. Okay.
52,000 is many more other projects, but this is what is imminent, which can happen in this quarter, in the current quarter.
Okay, and there's no real slowdown in RERA approvals, and that's, I mean, or is it running a little slow generally for everyone, or not really?
You cannot say. See, now we have authorities. We have the first of all, it's the approving authority. Then you have also the RERA authority. Now each one, every state has their own method of working. But I believe discipline is required, and I think we should not regret that. It's only that a lot more effort is required, and unlike in the past, you can't bring the product to the market till you have registered and got the RERA number allotted to you. And we are hopeful that it'll get done, and very soon. That's the good news.
In Karnataka, Bangalore, that e-Khata system, all that is stabilized now, right? Things are.
Yes, it has. See, any change always has its stress, but I think the change is for the better, and e-Khata just brings in that much more discipline again. For change over from one system to the other, to get people to get used to it, including authorities, it takes time, but I think it's stabilized now.
There is no slowdown in demand, in your opinion, right? You're not sensing any of that at all. Inquiries, etc., remain super strong. We've heard from some mid-tier developers out of NCR that the velocity has slowed down. It could be maybe a one quarter, 2 quarter thing, but are you sensing anything?
Not really. I think the demand is quite good. Unless the pricing goes up too high, that's where we are very conscious. We are trying to bring the product at a fairly acceptable price. At the same time, seeing that the bottom line for the company is also properly protected. And I think the demand is there. And I believe the demand is there, because we can sense the demand. Because people are reaching out to us that they want to buy, they want to invest, and then unfortunately we can't really accept even a single rupee till or even probably even advertise till the product is the RERA numbers are allotted.
Out of time, Mr. Razak, but thank you very much for joining in. That's prestige for the markets. It's now inching towards 23,400, and the Tata Group stocks are on fire. It's Trent right on top, followed by Tata Consumer, 3.5%, Titan, Tata Steel, all showing you some solid gains. So it's a good market. Mid-cap index is up nearly 1%. Get into a break. On the other side, we'll talk tax. Akhil Chandna of Grant Thornton and Akhilesh Ranjan of Price PwC will join in to talk about in detail their direct tax expectations from the budget.
Welcome back. It's all eyes on the union budget as Finance Minister Nirmala Sitharaman gets set to present the document in the floor of the House tomorrow. Now, there's been a lot of chatter and speculation about potential tax changes, specifically on the income tax side, personal income tax, to give some relief and boost consumption. Well, what are the key tax expectations in terms of direct taxes? To discuss this, we have with us Akhil Chandana, partner direct tax at Grant Thornton. And we also have Akhilesh Ranjan, advisor tax policy, PricewaterhouseCoopers, and of course, the former member of the Central Board of Direct Taxes. Gentlemen, thank you very much for joining in. Good to have both of you on. Mr. Ranjan, I want to start with you. In your earlier avatar, you would have heard such clamor, so often, and the request for relief, right? And I think the clamor and the noises are a little louder this time, because companies have been telling us that indeed there is a slowdown in urban India, and this slowdown in urban demand, perhaps not too many people saw it coming. So what do you have to say about this huge expectation of a relief in income tax?
Yes, good morning, and thanks for having me here. Certainly, yes, there is a lot of clamor and a lot of noise about the distress in various parts of the population. There are, of course, economic concerns. I think the concerns on private investment, the concerns on skill upgradation, on employment, job creation, a whole lot of things. But it's quite refreshing to see the focus on the middle class this time. This is a class which I think very important, not just because of the numbers in the population, but because it really contributes, or it can contribute tremendously to economic growth. It is also the repository of talent, which is, I think, something we need for long-term sustained growth. So the noise is good. The discussion is nice. Let's see what ultimately comes out. What are the constraints of the government? Coming to the tax structure, I think I would talk essentially about the so-called middle class as far as direct tax is concerned, which would be people earning between 5 lakhs and 25 lakhs. In my view, that is the class to be seen. This class covers about more than 3.5 crore of taxpayers, and this is, I think, the main backbone of the tax collection system. Now, there have been some attempts made, and in fact, a lot of attempts made to give relief to the lower part of this lower segment of the middle class, people earning up to 10 lakhs. I think that's quite fair enough at the moment. You don't pay tax up to 7 lakhs. You pay just 50,000 rupees if we have 10 lakhs. I don't think it can get better than that. But it is the portion of the segment which is between 10 and 25, which is the problem area, I think. And it's not just the question of giving relief, but also of rectifying the structure. So I think. Yeah.
No, absolutely, sir. And I mean, that segment up to 10 lakhs was given relief even in the July budget in the new tax regime with certain tax slab changes. And, there's the overall sweetener of higher deduction. But I have a slightly more sort of philosophical question on tax policy, or rather tax philosophy. And I want both of you to weigh in on this. And if I could take our viewers also back in time, because 2019 is when the government decided to move forward and, cut the corporate tax rate. And that was a radical move and radical reform at that point in time. Akhil, now come in on what has happened since then, because I think the stance the government has always taken is to stimulate the economy, stimulate corporate India, lower taxes, spend on, even on government capex, and hope for all of that, the benefits of that to percolate down to the consuming class. Do you think that will continue to be the view of the government, even if we might be an interim short-term consumption slowdown? Akhil?
So I think Mr. Ranjan has clearly laid down that for middle class, the expectations are to lower the tax rates. And recently, we've done a survey at a GT Bharat where, more than 500 respondents, especially from a personal taxpayers, they've responded. And the overall theme is on the similar lines, that out of 500 people, 57% of the people feel that the tax rates are still higher. Though the government has been continuously giving some kind of reliefs, but they believe the tax rates are still higher. That should be reduced, and even some exemptions should be bring in. Though the theme is to move to the new tax regime, and we've seen in the last year that 72% of the people, like more than 5 crore, if I see the numbers in front of me, more than 5.27 crore people have filed their tax returns under the new tax regime. But still, they believe that to make it more attractive, we need to bring more exemptions and deductions, available under the new tax regime. And that's the overall theme which has been coming from the survey or otherwise also, that people are looking for simplification of tax compliances, especially NRIs, if you ask me. Lower tax rates and more deductions and exemptions, be it standard deductions or the benefits given under the loss from property and all. So those are the overall themes which we have to see tomorrow what the government has to offer.
Sure. Absolutely. Mr. Ranjan, if I could come to you with that same question, thematically speaking, it's been all about triggering the animal spirits in corporate India and also stepping up public capex and then hoping for those benefits to trickle in. Whether you see a change in that approach at all. And, then let's bring in the other segment as well. On the corporate side, of course, there's a big ask to come back with the concessional rate of tax for new manufacturing companies. If you see, that could be a possibility or anything else. So you've discussed on personal income tax, there is need for, some changes maybe in the 10 to 25 lakh bracket. What about the other side?
So I think the corporate tax reduction was something which it was a good policy move. The rate of 25 is something which makes the Indian economy quite competitive. The only problem was that it was not accompanied at the same time by personal income tax reforms. We had submitted a report in 2019 in August at the task force, which was headed by me, and the corporate tax was part of it, which has been implemented. The personal income tax also needs a rejig, in fact, to make the whole thing become cohesive. There has to be some, you can't have a situation where a corporate pays 25% tax on a huge profit, but the salaried individual with 15 lakhs pays 30% tax. That is something which should be rectified, and I hope something is done about it this time. The middle class is also, it is important because, there is this theory of marginal propensity to consume. A small reduction in the tax liability for the middle class really translates into a higher spending in consumption. So I hope all hopes for that. As far as corporates are concerned, as I said, the tax rates are reasonable and moderate. There are other concerns out there. There are concerns of tax certainty, of litigation, concerns which are bordering around how can the government incentivize manufacturing. The last time we had the concessional rate, it didn't really take off probably because there were so many other concerns or other risks that the investors feel that they're in the economy. I think it has to be a coordinated approach, maybe go back to a slightly concessional regime, modified regime, but with a host of other things like low-cost credit, things on skill upgradation, encouraging startups and entrepreneurs. I think those are the things which should be done if we are really looking at sustained and high growth over the next several years, which I think is what India really needs.
Okay, gentlemen, very quickly, coming now to market-linked taxation, where obviously capital gains is the big talking point. Akhil, quickly, in brief, are you expecting anything else? Any further clarification? I'm not even going into another hike or another cut, but anything more if you would expect on capital gains tax and specifically on STT?
I think before I come to the capital gain, just to add what Mr. Ranjan has said on the corporate tax, I think 15% though has been given to domestic manufacturing companies up till 2024. I think the expectation is that 15% should increase. With the years, the benefits should increase and even extend to more other than domestic companies to GCCs and all. And there's a buyback, of shares. That addressing taxation on that is very much expected by the people. They can come up with, I think everyone knows what the expectations are there. Now coming to capital gain, I don't see, any change happening. But if you ask me, I think people are expecting that old capital gain tax regime should be brought in. And even for that matter, STT, if the capital gain continues like this, the STT should not be charged. But let's see what's there tomorrow.
Okay, finally, to wrap it up, just 30 seconds left, Mr. Ranjan. You've been the man on the inside as well in your earlier avatar. So in 30 seconds, if you were to sum up, what could be the likely realistic expectations on the direct tax front tomorrow? What would they be? The top one or two, perhaps.
I think there will be some relief for the middle class, but that may not be to the extent that one would hope for, because essentially because of the constraints of the government. I think they will stick to the fiscal deficit of 4.5%, and then therefore that leaves less of leg room for any changes, major changes. But that change should be there, and look at and see what the corporate sector really needs. I think it's not just the high-income corporate group, but the MSMEs, which need a lot of attention. And I think that the government is alive to that concern. I hope to see a lot of changes for the benefit of the MSMEs. So on both counts, I think there should be some changes for the better for all sections. On the capital markets, I don't think there'll be a change, and I don't think there should be a change. Things are fine. We have just changed the capital gain structure. Should let it settle down before making any further changes.
Got it. So the finance minister has a tough ask ahead of her, right? A please all budget. Can she really deliver that tomorrow? And please all sections equally. Thank you very much, gentlemen, for weighing in on the likely big tax expectations. We do have to take a very quick break on that note. On the other side, Lata joins in, and she will be in conversation with Debadat Chand of Bank of Baroda to talk about the third quarter earnings fine print.
Welcome back, and we are coming back to earnings analysis. Bank of Baroda posted a good set of numbers. You can't complain. The asset quality has improved considerably, and the advances and deposits growth at about nearly 12% each is fairly decent compared to most other banks, especially public sector banks. The problem for the market is really the NIMs. The net interest margin is not climbing above the 3% mark for the bank as a whole. And that's pulling down the profit growth as well, as you will see in just a minute. Let's invite the management. We have with us Mr. Debadat Chand, the Managing Director and CEO of Bank of Baroda. Good morning, Mr. Chand. Thank you very much for spending time for us. Appreciate it. For starters, if you can tell us the NIM problem. I mean, I'm starting with the negative because that's the only thing investors are worried about. They're happy with everything else. The net interest margin, is it large? Is it that your cost of funds has gone up? Is it showing any signs of plateauing?
So thanks, Lata, for inviting me. And the fact of the matter is that the bank is very consistent in terms of whether it is a top line, bottom line, asset quality. The profitability has been very consistent for the last 8 quarters, so as the ROA. As far as the margin is concerned, let us be very clear that there is an underlying market where there is a cost of deposit, it's still elevated, right? A scenario where the cost of deposit is elevated, we had a guidance earlier from 3.10 to 3.20. But in between, there was an accounting change in terms of the penal interest and penal charges also that impacted the NIM by almost 5 to 6 bps. Having said so, if you look at the 9 months NIM, it is at 3.08, which is marginally lower than the guidance we had given of 3.10. So looking at a Q3, something slightly lower at 3, but we are hopeful that for the full year, we'll be maintaining the margin at 3 to 3.10. It's quite natural in a market wherein if there is a elevated cost of fund, the deposit market is tight, the margin would slightly get squeezed. But a scenario where the margin is squeezed, again, we're able to optimize the ROA. The net interest income has been very strong. So it's a combination of multiple factors. We have been very consistent in terms of the growth profit. The 9 months profit has been almost up by 12.6%. The top line is growing at almost 12%. So these are very consistent, stable. That is what sustainability is key, important part of the profitability, not the margin per se for a particular quarter.
Okay. No, I take your point that so much depends also on how you deploy funds, and you have had a very big retail deployment, which must have given you a higher yield, higher return on the funds deployed. Higher retail gives the fears of unsecured debt. What is the percentage? And are you noticing any signs of trouble? What is the NPA in the unsecured credit itself?
So that's a very fair point. If you look at my retail growth, we are consistent almost 20% for last many quarters, 8, 9, 10 quarters now. Having said so, we have also said earlier that the focus continue to be on the secured part of the retail. The loan in the mortgage loan, the housing is growing almost at 17%. The auto is growing at almost 17%. So we are not focusing on secured personal as a growth lever in terms of the retail loan. The book as on today is almost 30,000 crore. And the GNP on the unsecured personal loan is almost like 3%. And if I talk about the retail GNP, it's something around 1.6%. So the levels are much lower in terms of the overall slippage. And saying so, we said earlier, actually, rather we're the only, the bank to say in June 2023 that we're going to moderate on the unsecured personal loan. At that time, the growth almost used to be 80 to 100%, but now the growth is almost 24%. And in between, we have strengthened a lot of underwriting standard, quality, the model and everything. So we're quite comfortable growing at 25-30%. And the book is not giving any kind of elevated slippage for us to slightly be concerned about that. We're quite comfortable with the retail growth of 20%, and primarily the focus continue to be on the mortgage side rather than the unsecured personal.
Okay. Can you give us some guidance on what's the loan growth expected overall, retail?
See, going forward, we said that full year we are targeting a loan growth of 11 to 13%. Rather, we'll try to operate at the upper band. That means I'm talking about 13%. Within that, the retail continue to be at 20%. The agri MSME would grow at 14%, and the corporate would grow at 10% for the full year. So maybe, the total can be around 13 or slightly marginally higher than 13% for the full year.
Okay. Okay. You'll be able to bring down your loan deposit ratio in that case? Will advances, what I mean is, will deposits also grow as good?
So that is what actually we had given a guidance last time. Rather, we revised the guidance 1% lower last quarter. And we said the deposit growth would be 9 to 11%, right? And the current quarter growth is 11.78%. So saying so, the guidance on the deposit continue to be 9 to 11%. So we operate at the upper band, let's say 11% deposit growth and 13% advance growth. My LDR, the CD ratio continue to be at 84.
Okay.
So
Mr. Chand,
there is nothing,
I will have to interrupt you because the Prime Minister is speaking ahead of the budget session. Please hold on. We have to listen in.
बजट सत्र के प्रारंभ में मैं समृद्धि की देवी मां लक्ष्मी को प्रणाम करता हूं। और ऐसे अवसर पर सदियों से हमारे यहां मां लक्ष्मी का पुण्य स्मरण किया जाता है। सिद्धि बुद्धि प्रदे देवी, सिद्धि बुद्धि प्रदे देवी, भुक्ति मुक्ति प्रदायिनी, भुक्ति मुक्ति प्रदायिनी, मंत्र मूर्ते सदा देवी, मंत्र मूर्ते सदा देवी, महालक्ष्मी नमोस्तुते, महालक्ष्मी नमोस्तुते। मां लक्ष्मी हमें सिद्धि और विवेक देती है, समृद्धि और कल्याण भी देती है। मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, हमारे गणतंत्र के 75 वर्ष पूरे हुए हैं। और ये हर देशवासी के लिए सर्वाधिक गौरवपूर्ण है और विश्व के लोकतांत्रिक जगत के लिए भी भारत का ये सामर्थ्य अपनी एक विशेष स्थान बनाता है। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है। और मैं विश्वास से कह सकता हूं कि 2047 जब आजादी के 100 साल होंगे, विकसित भारत का जो संकल्प देश ने लिया है, ये बजट सत्र, ये बजट एक नया विश्वास पैदा करेगा, नई ऊर्जा देगा कि देश जब आजादी के 100 साल मनाएगा तब विकसित होकर रहेगा। 140 करोड़ देशवासी अपने सामूहिक प्रयास से इस संकल्प को परिपूर्ण करेंगे। तीसरे टर्म में हम मिशन मोड में देश को सर्वांगीण विकास की दिशा में, चाहे वो भौगोलिक रूप से हो, सामाजिक रूप से हो या आर्थिक भिन्न भिन्न स्तर के संदर्भ में हो, हम सर्वांगीण विकास के संकल्प को लेकर के मिशन मोड में आगे बढ़ते जा रहे हैं। इनोवेशन, इंक्लूजन और इन्वेस्टमेंट, ये लगातार हमारे आर्थिक गतिविधि के रोड मैप का आधार रहा है। इस सत्र में हमेशा की तरह कई ऐतिहासिक बिल पर संशोधन को चर्चा होगी और व्यापक मंथन के साथ वो राष्ट्र की ताकत बढ़ाने का काम करने वाला कानून बनेंगे। विशेषकर नारी शक्ति के गौरव को पुनः प्रस्थापित करना, पंथ संप्रदाय के भेद से मुक्त होकर के हर नारी को सम्मानपूर्ण जीवन मिले, उसको भी समान अधिकार मिले, उस दिशा में इस सत्र में कई महत्वपूर्ण निर्णय लिए जाएंगे। रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। जब विकास की तेज गति को प्राप्त करना होता है तो सबसे ज्यादा बल रिफॉर्म पर रहता है। राज्य और केंद्र सरकार ने मिलकर के परफॉर्म करना होता है और जन भागीदारी से हम ट्रांसफॉर्मेशन देख सकते हैं। हमारा युवा देश है, युवा शक्ति है और आज जो 20-25 साल की आयु के नौजवान है, जब वो 45-50 साल के होंगे तब वो विकसित भारत का सबसे बड़े बेनिफिशियरी होने वाले हैं। उम्र के उस पड़ाव पे होंगे, नीति निर्धारण की व्यवस्थाओं में उस जगह पे बैठे होंगे कि वे गर्व के साथ आजादी के बाद जो शताब्दी शुरू होगी, एक विकसित भारत के साथ आगे बढ़ेंगे। और इसलिए ये विकसित भारत के संकल्प की पूर्ति का प्रयास, ये अथाग मेहनत, आज जो हमारे टीनेजर्स हैं, हमारी युवा पीढ़ी है, उनके लिए ये एक बहुत बड़ा तोहफा बनने वाली है। जो लोग 1930 में, 42 में आजादी के जंग में जुट गए थे, पूरी देश की युवा पीढ़ी खप गई थी आजादी के जंग में, और उसके फल 25 साल के बाद जो पीढ़ी आई उसको नसीब हुए। उस जंग में जो नौजवान थे उनको नसीब हुए। आजादी के पूर्व के वो 25 साल आजादी के जश्न मनाने का अवसर बना। वैसे ही ये 25 वर्ष समृद्ध भारत, विकसित भारत, ये संकल्प से सिद्धि और सिद्धि से शिखर तक पहुंचने का देशवासियों का इरादा। और इसलिए बजट सत्र में सभी सांसद विकसित भारत को मजबूती देने के लिए अपना योगदान देंगे। विशेष करके जो युवा सांसद है, उनके लिए तो सुनहरा अवसर है, क्योंकि वो आज सदन में जितनी जागरूकता, जितनी भागीदारी बढ़ाएंगे, और विकसित भारत के जो फल है वो तो उनकी नजर के सामने देखने को मिलने वाले हैं। और इसलिए युवा सांसदों के लिए एक अनमोल अवसर है। साथियों, मैं आशा करता हूं कि हम देश की आशा आकांक्षाओं के इस बजट सत्र में खरे उतरेंगे। साथियों, आज एक बात आपने जरूर नोट की होगी, मीडिया के लोगों ने तो जरूर करनी चाहिए। शायद 2014 से लेकर अब तक शायद पहला पार्लियामेंट का सत्र है कि जिसके 1-2 दिन पहले कोई विदेशी चिंगारी नहीं प्रगटी है। विदेश में से आग लगाने की कोशिश रही हुई है। 10 साल से, 14 से देख रहा हूं, हर सत्र के पहले शरारत करने के लिए लोग तैयार बैठते थे, और यहां उसको हवा देने वालों की कोई कमी नहीं है। ये पहला सत्र मैं पिछले 10 साल के बाद देख रहा हूं कि जिसमें किसी भी विदेशी कोने से कोई चिंगारी नहीं हुई। साथियों, बहुत बहुत धन्यवाद।
Okay, I think that has definitely increased the expectations. The Nifty, we should get the intraday chart, had just seen a slight uptick with the Prime Minister's announcements. He appears to be saying that we will do everything, that there will be investment and there will be inclusion. The market is betting on one of the two, but looks like we will get both. As well, he has promised that as the first full budget of the third term of the NDA government, we should expect something major, something big. So the market's excitement has just gone up, as you can see, from 10:20 onwards with the Prime Minister's speech. The expectations have definitely been aroused, and you're seeing both capital goods stocks as well as FMCG stocks just get a bit of a leg up. There seems to be a little enthusiasm, a little increase in the hope as to whether the budget can make a big difference. But we will get the economic survey today. And there we will perhaps get an idea of what will be the growth assumption. Will they assume a 10.5% growth, 11% growth, I mean nominal, and a real GDP growth of 6.5% or 7%? Those will be the first expectations. Our colleague Parikshit has been nosing around and probably has a few things about what the survey might say. Morning, Parikshit, tell us.
Well, we're expecting Finance Minister Nirmala Sitharaman to table the survey officially in the Lok Sabha at around 12:30, 12:45. But ahead of that, the Chief Economic Advisor, Anant Nageshwaran, has written an op-ed where he's actually set the context for the economic survey this year. And he has said that the economic growth slowed to 6% in H1 of FY25, second half to be better. In fact, our sister channel CNBC Awaz has been reporting how the survey could indicate a less than 7% GDP growth. So let's see what the survey finally says. Anant Nageshwaran in his article has also spoken about the long-term challenge that India faces in managing energy transition, bringing down share of fossil fuels while ensuring affordable energy security and also the transition to electric mobility. There is also a worry about over-dependence on China, which may be indicated in the survey. For example, Anant Nageshwaran goes on to say that the challenge confronting India right now is that the dependence on imports for crude oil supplies is replaced by dependence on imports from a single source for critical components, minerals required for renewable energy. He's also spoken about the need for private sector to step up, something that he has been saying over the last few months. Social stability, long-term profitability rest on the private sector, finding the right balance between capital deployment and labor employment. The economic survey will delve into the obligations of the private sector. The path ahead will require constrained optimization of limited resources to achieve maximum output. This is the CA speaking about the kind of steps that would be needed for India's economic growth. He also said that India, to navigate this complex global landscape, will require strategic foresight, adaptability, and willingness to make tough but necessary choices. The survey will answer questions on the course of key interest rate expectations, impact of AI on job markets, impact of AI on global trade as well. The survey will also explore how India can respond to uncertainties and accelerate economic growth while ensuring equity and inclusion. So these are some of the points that the CA has highlighted in his article, and we are going to find those answers in the survey as well.
Yeah, thanks a lot for that, Parikshit. That was an excellent op-ed, which I read, written by Dr. Anant Nageshwaran yesterday in the Mint. So we got a good 24-hour heads up. Incidentally, this dependence on China is for critical raw materials. The overall dependence, current account deficit of India is also high vis-a-vis China. But I just want to leave you with one thought. For the first time, the cost of the yuan, that is the rupee-yuan rate, is in favor of the rupee, in the sense the yuan has become expensive. It costs now 12 rupees and 7 paise to buy a yuan, about the highest, which is very good. That reduces the imports from China. On that note, wrap up on Bazaar. Chart busters will take the action.